Hopefully, everybody watched the daily market update. That is a very good, quick summary on my thoughts on the market. So you're not really going to get too much more from me. Maybe we can jump in. I'll go on some tangents and some rants and whatever as I usually do. But that's really the gist of it. The 12-hour 200 moving averages, along with range lows, are still allowing me to be optimistic on this market on a much higher time frame outlook, right? So on a much bigger scale, if you were to ask me the question, hey, Mercury, is this still a bull market? Then I would have to say yes, right? Because we're still uptrending on the weekly. We're still holding a very key, very high time frame kind of trend. And we're still trading inside of a 2 month long range. So as long as those things remain true, then I would still be more inclined, much more inclined to say, yes, this is still a bull market. There's still good things coming. We're still going to see new all-time highs at some point later this year, those kinds of things, right? I'm allowed to be optimistic in that sense on a much broader, much greater kind of outlook. So the real kind of thing that troubles me is that if we lose this region, I lose those arguments, right? Maybe this isn't a bull market at that point anymore. Maybe this time is different. Maybe we will see a negative 30% drawdown, negative 40%. Maybe we will see a retest of 70K. Maybe the altcoins that are down negative 90% go down another negative 90%, right? This would not be the first time that I've witnessed that happening. So maybe the normal market movements continue to be normal, right? Number go up and then number go down. So we have to be able to think in both terms. You're not going to get anywhere in markets by just thinking mutually exclusive, right? So, hey, we're above 12-hour 200s, so all we can ever do is go up. That's not how we want to think about the market, right? Of course, we'd be more biased, more inclined to think that the market would go up. But if we lose those 12-hour 200s, based off the simple premise that all trends break, every single one breaks, right? Eventually that trend is going to break down. And when it breaks down, maybe it will actually lead to something significant, more than what we've seen, prior. So this market has been very much like mild and timid in the sense that, it hasn't really seen very sharp, very volatile sell-offs. And that's, my bias, and I'm sticking to that. You're not going to get me to see something different because that's the reality of it. So even just a couple of years ago, we had negative 30% daily candlesticks. What the hell is that? This drop would drive everybody crazy right now. Several times we've seen very, very sharp kinds of sell-offs. Even that was FTX capitulation. We haven't really seen anything even remotely close to this degree, right? Like that is negative 20% right now. So just imagine, market trading negative 20% lower. Bitcoin trading negative 20% lower than where it is currently today. And that's the kind of volatility that I'm used to. The market the past 2 years has not given us that. These drops, these pullbacks have been very mild. And I guess maybe that's just a byproduct of the fact that, Bitcoin is starting to become more institutionalized. For lack of a better understanding or lack of a better expression, it's starting to trade more like a stock, right? It's not getting these crazy gains to the upside. I mean, it's up 700% in the past 2 years. That's pretty crazy. Go throw your money into Vanguard or Fidelity or Charles Schwab or whatever. They're gonna do their damnedest to try and get you 7% year over year. So it's up 700% in 2 years, right? It's pretty crazy, but compared to crypto, it's pretty mild, right? It's pretty timid. That's kind of in my head a byproduct of us starting to be more institutionalized, as well as obviously Bitcoin market cap is much greater this time around. So we can imagine that the swings are gonna not be as crazy. So the funny thing is, this is the main reason as to why people off-put trading Bitcoin, because the swings are not appealing, right? Even if it goes up 10x, who cares? All that means is I go from 10,000 to 100,000, and $100,000 is not going to change my life, even though I'd much prefer to have $100,000. So I'll go trade Solana. Maybe it'll 20x, or maybe it'll have 200,000, and that will be life changing, right? I can pay off my student loans, I can buy up my car, I can do this, that, and the other, and put down a nice down payment on a house, and that will be life changing. So I'm going to go trade Solana instead. Where we veer off course is, why the fuck are you trading Bitcoin? Or why the fuck are you not trading Bitcoin? You're trading altcoins. If the main premise is to go trade something else because it's going to outperform Bitcoin, because the gains on Bitcoin are not good enough. So we want to go trade something else instead. But the something else that we're trading is not outperforming Bitcoin. So we could have just been trading Bitcoin and getting 700%, in the past 2 years, but instead we're going and trading something that is down negative 90% the past 3 months. That doesn't make any sense, right? So it's a very hypocrite, kind of like contradictory mindset. We need to make sure that we're adhering to winning philosophy, right? We understand the difference between what is relative strength and what is higher beta. So there's a very clear discrepancy. Maybe we can tangent off during the stream and kind of clarify what is the difference between the two. I feel as though that would be very valuable. But in the meantime, yeah, the Bitcoin analysis is not really changing, right? I'm still optimistic. I'm still looking for new all-time highs, whether that be tomorrow or 6 months from now. I'm still inclined to think in that manner and be biased towards that perspective and that outcome. But you have to be able to see both sides, right? You have to be able to. Trading is a beautiful mixture of, I think that this is going to happen, but I need to be prepared because anything can happen. So it's not just a matter of you only get to see heads or you only get to see tails. I'm sorry, but that's not how markets work, right? You can only play into one specific anticipation at a time. It's not like you can be hedged for a million different scenarios, but there's also a beautiful balance, right? You can find harmony. So if you're not all that convicted or you're not all that convinced that the market will uptrend from here 6 months from now, whatever, but you still want to play into that idea that maybe it will because we're respecting trends, we're just kind of taking things objectively, whatever. It doesn't mean you need to be 100% of your net worth exposed to Bitcoin because currently the market is more favored towards heads, right? That's not how that works. You can buy a little bit of Bitcoin exposure and plan on adding on later down the line, right? If we break out of this local range on Bitcoin, and all of a sudden now we're doing something different that we've not been able to do at any point in the past almost 3 weeks at this point. So if we manage to expand higher than this range area, then all of a sudden now in hindsight it seems a lot more likely that our 12-hour 200s did act as the bottom and they did hold as a higher low in the weekly, and the range lows did do the range lows thing, which means range lows, mid-range, and then range highs thereafter. So that's where we can start to increase our probabilities, right? That also means that there's potentially execution there. So first of all, the first nuance, the first caveat is, why do we not care about the hourly 200s at this point? Why are we waiting for a breakout of like mid-range, which just so happens to be, this local range high? Well, it's because we already reclaimed the hourly 200s, right? And we got all giddy about it. We were like, oh my God, maybe the 12-hour 200s actually did what they said they were going to do, right? Maybe we're ready to go higher, maybe range lows, mid-range, range highs. And then that's not what happened, right? We didn't get that. So I'm not going to fall for the same trick over and over and over, right? Fool me once, shame on me. Fool me twice, or whatever, however that saying goes, right? I absolutely butchered it, but you get the point. So I'm not going to allow the market to fool me again because that would be, terrible of me. So I'm going to create a new obstacle. Hey, market, in order for me to want to be, favored bullish on this time frame once again, and assuming, range highs in the near future, because right now we're just assuming range highs at any point, right? Just like point blank period, we will get to range highs eventually, and eventually we'll expand higher than the range highs. That is the analysis. So in order for me to get more giddy and more optimistic in the very near future, hey, we're going to go to range highs, sometime in the next couple days, next week, whatever, right? And have a more actionable kind of and detailed kind of analysis. The market needs to do something different than what is already done, only to chop sideways. So I don't want to just, keep falling to the same triggers and, oh my God, we're bullish again, right? Because we managed to peek our head out above these hourly 200s just for us to do this, right? And, oh, guys, we're bearish again. Oh, we're bullish again. Oh, we're bearish again. Oh, bullish again. Oh, get bearish again, right? Do something different, and then I will start to say, so now we're bullish on this time frame. So let me be real with you for a second. Let me be incredibly transparent. That analysis that I just gave you sucks. You understand that? It's fucking miserable. Like it's absolutely shit, because essentially what I just told you is, hey, once we're above mid-range, we probably go to range highs. Well, duh. Wow, thank you so much for this amazing, spectacular analysis. Well, where do I tip you the 3 Bitcoin that I owe you for dropping all this alpha on my head? It's not an amazing analysis in terms of how are we going to execute? How are we going to extract value from the market on its next movement that we can, have a very clear set of probabilities as to what happens next. We understand the analysis. We've broken down the puzzle, right? We understand the border, the frame of the puzzle. We understand all the other pieces. And, the next thing that happens, we will be able to understand and tie that in with the rest of the puzzle and have a very clear picture as to what we think happens next. But when it comes time to actually execute on that analysis, if you're talking about how do we take that analysis and then turn it into a trade setup that we can make money from, it's kind of shit. I'm not gonna lie to you. There's not really a ton of white space to justify a ton of RR. So let's just draw out really quick, hypothetically, what might that setup look like, right? And assume that, let's say that we're able to use this microstructure, right? This is going to be our microstructure low, and we go on for a reclaim here today. So then hourly 200s would probably, shape up and do something like this. Let's say we get that nice pullback entry. We have local range highs, which are just so happen to be this mid-range. So we have that support level flip. We have the market structure shifting bullishly, right, to a greater degree, to a more convincing degree than it has before. It's not just a measly, oh, hey, by the way, that's a higher high, right? It's a convincing, hey, I'm a higher high, right? And then maybe hourly 200s finally are a trend, and we can respect them as such because now we're assuming that the market is ready to start trending. So let's just hypothetically draw out that setup really quick. If we're going to take a setup something along these lines, that's a nice 2R trade into range highs. Is 2R good for you? Is that appealing? Right? And keep in mind that we are being speculative, right? We are hiding a stop loss below a microstructure. Technically, our stop loss needs to be here. That's our technical invalidation. That's where we can truly honestly say, yeah, that setup didn't work, right? Now we're wrong, right? Because we're making lower lows. We're back inside of that range. We lost hourly 200s again. We have failed to trend upwards. So that's technically where the market says, hey, by the way, Mercury, you're an idiot, right? It wasn't actually a breakout. It was a fake out. That's where the market invalidates that setup or that idea. By pulling this stop loss closer to our entry and gaining more risk reward, we are exchanging perceived probabilities. So what that means is we're a little bit more susceptible to getting caught out on like a fluke, right, or a wick or whatever. If we hide our stop here, something like that can happen, and we can't really blame the market for it. We know that technically our stop was supposed to be right here. We tried to get cutesy and play into the market to make this RR more appealing, and then we got wicked out of the trade as a result. So if we're taking the trade at face value, the analysis at face value, we're trying to create a trade setup off of it, 1.5R. Let me be totally transparent with you. I'm not taking that setup. That's not very appealing. The appeal really starts to come in when we can scale our assumptions, right? 12-hour 200s are still holding. We're still putting in higher highs and higher lows in the weekly structure. And as long as we remain in this 2-month-long range, we might break out of this range just the same way that we've broken out of every range the past 2 years, right? To trend upwards eventually at some point into price discovery. So we can assume the same thing once again. It would just be a rinse and repeat of the same analysis that has worked for the good portion of the past 2 years. So that means that we get to scale that into infinity, right? If you think my target is $155,000 Bitcoin upon breaking out of this 2-month-long range, you're wrong. It's actually infinity. But 155,000, the 2.618 fib of the logarithmic fib extension from the 2021 high to the 2022 low, $155,000 is a checkpoint, right? It's the only thing that's applicable in price discovery is these fib extensions. So once we get into price discovery, that would be a checkpoint. And then that's where I would scrape off target or profit on that setup. And so therefore we kind of think about it as like, that's my next target, right? But my target, truthfully, is infinity. So that's the only way that we could draw an appealing setup on Bitcoin is by, really grasping at straws, right? Kind of similar to what we said in September, where this domino knocks over the next domino and the next domino and the next domino and the next domino. And you're looking at me and you're like, Mercury, what the fuck are you talking about? Now, how is it that a reclaim of stupid 2-hour 200 moving averages and a higher high on the 4-hour chart is going to lead to expansion into bull market, into $100,000 Bitcoin, right? Or 102,000, 1.618 fib. How the fuck does that work? So it kind of seems like grasping at straws, right? Because it is. But that's the kind of scaling assumptions kind of mentality. So that's the only way that the setup is actually truly appealing, is if we're willing to scale it to that kind of degree. Otherwise, the only really probable, that we can think about in terms of like high probability we will get this white space, and then further than that is more speculative, even though we're playing in tandem with the high time frame trend. We are abiding by the same cyclical kind of nature as to what Bitcoin has followed through with the past 2 years. We still have to kind of break it down from there, right? It gets a little bit fragmented. So we're still inside of the 2 month long range, right? When we get to the range highs, technically the range is saying that range highs should go back to mid range and then range lows. So you see how that's starting to become like a more conflicting analysis, even though we can kind of trumpet and prioritize the 12-hour 200s, the higher highs and higher lows in the weekly. The range highs give us a kind of convoluted analysis, right? So we can only really kind of, and I hate to use this word guarantee, the market never guarantees shit. Let's be very clear about that. But the only thing that we can deem very high probability would be the move from mid range into range highs. So you have 1.5R that's like highly probable. And then once you get that 1.5R, you have to start asking a lot of questions. Do I want to take profit here? If so, how much profit do I want to take? Would I rather take no profit and risk the possibility of a full round trip, right? What if the range highs do act as range highs and send us back to range lows this time? Or do I want to take full profit and just capture my 1.5R and walk away and never touch Bitcoin again until it breaks out of this range or it's back at range lows or whatever, right? So we have to start asking all those questions 8% higher. Now, it's up to you, right? If that setup, the way that I just broke it down in terms of perceived probabilities, how we would scale it, how would we think about the execution when we go to put in that setup, how much profit you're going to take off, the profit that we can deem kind of highly probable once that setup comes into fruition, 1.5R, all those variables, right, shape up and then either conclude to an appealing setup to you or an unappealing setup. Right? For whatever reason. Maybe it's appealing to you because you have zero Bitcoin exposure and you're just looking for something to capture, the next major move upwards on the coin that has, basically just kind of shrugged off all FUD the past 2 years and continued trading towards price discovery. Maybe you want to play the outperformer, right? The alpha in this market. Maybe it's not appealing because you already have 70% of your net worth exposed to Bitcoin. Maybe it's unappealing because even though you have no Bitcoin exposure at all, you're able to capture altcoin opportunities that you would deem outperforming, right? So things that you would actually trigger that do threaten price discovery to a more substantial degree, or something along those lines, right? Or even if it's not price discovery, maybe it's a more significant kind of movement. Maybe as Bitcoin is breaking out of a 3-week long 3% range and reclaiming a local trend or whatever, maybe as that's triggering, something else is breaking out of an 8-month long range, and then all of a sudden that becomes a more appealing kind of setup, right? So for whatever reason, but that's going to vary between you and I based on our discretion, based on who we are as people, based on how our portfolio is set up, based on how we perceive the probabilities, right? So even though we would perceive it to be in our favor, maybe you're going to say 90% degree, high conviction, and maybe I'm only going to say 55% degree. Maybe I'm low conviction. Maybe I'm kind of, traumatized by the mid-range chop, whatever, right? So I'm less convicted. I'm less able to be so adamant about what I'm seeing and how I'm executing. So there's discrepancies, even though we're looking at the same chart, even though we're kind of thinking about structures the same way, even though we're looking at the same 12-hour 200 moving averages, even though we might assess the market structure on the weekly the same way, even though we have the range drawn the same way, there's totally different ways in terms of how we execute. So I hope that that's very clear. And this is going to be the analysis if that triggers, right? Now let's talk about the downside. If we do break down, and I think that this is kind of, I've been alluding to this because obviously we're at range lows. So you have to keep this in the back of your mind. You are absolutely doing yourself a disservice if you're not considering what happens if I'm wrong, and at what position does that put me in, and what kind of nature does that put the market in, and how does that change the environment, and how does that change my trade setups and whatever, and my execution and my plan moving forward. If you are not considering these things, you are genuinely doing yourself a disservice. You are not going to get anywhere in markets by just focusing on one side of the coin. I hate to break that to you. I know that it sounds like bi-directional bullshit hedge. Let me make sure that I'm always correct so that I can claim clout to all 8 people fucking watching this right now. I understand that that's how it comes off. I need you to see past that. This is reality. This is how markets operate. You have to be anticipating whatever the fuck you're anticipating based off of what your analysis is saying and how your discretion is and whatever, right? Based off of how you're interpreting the chart, but at the same time, understanding, fully understanding that anything and everything can happen. If you are not doing this, you are genuinely doing yourself a disservice, right? There's no great chess player out there that just goes into a chess match with, okay, I'm going to play the, I don't fucking know chess, guys. I'm going to throw out some random bullshit. You're going to make fun of me. The Iron Turtle strategy, right? This is genuinely what chess strategies sound like to me. I'm going to go in with the Iron Turtle strategy. And then your opponent recognizes that you're playing this Iron Turtle strategy. So then they play the counter strategy to that one. Are you just going to keep playing that strategy? You're just going to keep playing, right? The same thing that you started with, the first 4 moves of your chess match. You can clearly recognize that, your opponent is literally playing your counter. So if you keep going with this strategy, you are destined to lose. 100%, that counter strategy was created to counter your strategy, your approach. You have to change the approach. You have to be malleable. You have to now apply the wood dragon strategy, right? And this is how great chess players operate. And it's a constant. Okay, you're trying to counter my counter. Now I'm going to counter your counter. And it's constant ping pong back and forth. It never stops until somebody wins, right? That's how this operates. So you have to kind of think about markets the same way. If you are only focused on one approach, on one strategy, on one side of the coin, you're missing the entire other part of the market where literally anything and everything can happen, or the direct inverse of what you currently anticipate happens. So this is where I think people that struggle with thinking critically, right? All it is critical thinking. If this, then that. But if that, then this, right? That's it. That's all that you have to do. It doesn't really go too far beyond that. You just have a plan and a backup plan. And then once you kick into your backup plan, now you know the alternative. So let's break that down. So let's say that 12-hour 200s break down. Now all of a sudden, we are doing a lot of things at the exact same region. We are breaking our weekly market structure bearishly. When's the last time that we did that? Lower high in the weekly, right? I bring this up all the time. When we broke into a lower high in the weekly, my following said, don't you care? Don't you know that nobody cares about the weekly market structure? Just wait for weekly candle closes below the range, blah, 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 right? And then the weekly candle close right there. Absolutely terrible analysis. So when the weekly structure broke, we acknowledged it. We gave it a lot of merit because prior to that, the last time that we had a break in our weekly market structure was all the way down here, November 2022. So consider this. All we did was we looked at the market and said, oh, something significant just happened. We haven't done this in a year and a half. Oh, that's crazy. Oh, maybe it's significant. And then it was, right? For the next 3 months, we then downtrended towards the bottom right corner. We sold off negative 30% from where that lower high was put in and negative 29% from where we were able to say, that's a lower high now. Maybe it leads to a lower low. Maybe it leads to more significant, more prolonged downtrend, right? So that's it. That's all that we did. It wasn't spectacular. There's nothing like you needed to be a rocket scientist or you needed to have 7 years of, market experience in order to make that analysis. All you had to say was, this is lower than that. That's it. That's a weekly market structure break. That's probably significant. Let's attribute significant arguments, right? And then we immediately continued downtrending another negative 20%. So again, and that was over the course of weeks, right? It wasn't a sharp drop. It wasn't, 2021 volatility. It wasn't anything that I know crypto to be. It was just negative 20% over the course of 3 weeks. It was still negative 20% though, right? Thank God we acknowledged it. So the same kind of gist, right? If we break down weekly market structure, if we start to lose this very high time frame trend that we've really only lost 2 or 3 times in the past 2 years, and if we start to break down below 2 months of ranging, so consider this, For the past 2 months, the market has only gone from 91K into 99 into 107. And then from 107 back into 91. And then from 91 back into 99, right? That's all it's done. It hasn't traded at 89. It hasn't traded at, those 80s. So if it starts to do that, then maybe that's different, right? We're seeing something different than what we've seen the past 2 months. But at the same time, we're seeing something different that we've only done one other time the past 2 years, right? Put in a lower low, meaning breaking the market structure on the weekly. But at the same time, we are doing something significant that we've only done 3 times or 2 times the past 2 years. That all happens at the exact same region. Oh, yeah. So you just heard my arguments, right? Yeah, that's cool. Just buy the dip at 85K, and then that's going to be the V reversal, and then we're going to run to price discovery, right? Because clearly that's going to be a sweep of the lows, and then we're going to reclaim the local trend, and then the local trend reclaim is going to lead to a reclaim of the high time frame trend, and then the high time frame trend reclaim is going to lead to a deviation back inside of this 2 month long range, and then the deviation back inside of the 2 month long range is going to help us lead to a reclaim of this very, very high time frame trend, and then we're going to get to range highs, and then once we get to range highs again, we'll break out of the range. Does that sound like a good analysis? Or does that sound more hopeful? Does that sound more optimistic minded? Does that sound more complacent, right? It absolutely is. There's no way in hell that I'm going to flip it around and say, oh, guys, I actually love that we're breaking down below a 2 month long range like we have not been able to do the past 2 months, right? I actually love that we're losing a high time frame trend that we've only been able to lose two times throughout the past 2 years, and the other 2 times that we lost them, they did lead to more significant drawdown. Oh, and that we're also breaking our weekly structure that we've only been able to do one other time the past year, and the time that we did it, it immediately led to a negative 20% sell off, and then 3 months of downtrending, slanted price action. Yeah, who cares though, right? Because this is just a sweep of the lows, and we're just going to reclaim literally everything above us, and then we're going to run back to price discovery. And no, the bull market's not over. Oh, by the way, if we wanted to enter a bear market, we have to do all these things, right? We have to lose all these levels, and now we've lost all these levels. But nah, it's still a bull market though. There's no way that we lead into a bear market. Nah, it's not possible. Imagine if I said that to you. Wouldn't that sound disingenuous? Wouldn't that be opposite to the mindset that we've approached with for the past 2 years? Oh, yeah, guys, I know that we're breaking down below this range, but who cares? Nah, we're going to head back up, right? It's just going to be a deviation. It's a fluke. It's a fake out. Nah, I know that people want you to be bullish, but nah, right? Yeah, I know people want you to be bullish, but no, it doesn't matter. No, don't you know that that's a sweep of the highs? Don't you know that there's like we tapped this resistance level that I just drew on my chart all of 4 seconds ago? Yeah, you guys are idiots if you're bullish here. I can't believe you. No, it's the opposite mindset, right? What mindset has rewarded us? Just respect the fucking trend, dude. Just shut up and find places to bid. Just look for pullbacks. Oh, you're not getting your pullbacks into 4-hour 200s? Aw, that sucks. Maybe zoom into a local trend, right? Maybe start to trade that instead. Oh, you're not getting local trend pullbacks? Oh, you're not comfortable with the setups that the local trend pullbacks are giving you? It's kind of like there's not great invalidations, right? Maybe the, take profits are not far away enough and it's not good RR. Oh, go trade altcoins, right? But be bullish bias when you go trade those altcoins because, as long as they're showing strength, as long as they're breaking out, they're probably going to keep breaking out. And then Solana goes from 25 to 200 in the span of 2 years. And we're like, oh my God, this is the worst bull market ever. I hate you, market. Right? That's what happened? No. We trade the market the same way. It's just either direction. It's just which way is the chart headed. We have to be malleable. We have to be fluid. How are you going to be fluid if you're only focused on one side of the coin here today? You're damn right that I'm focused on what happens when this market breaks down below every last remaining bullish argument that I'm holding on to here today. It's the last bullish argument that I have for you until we get to 70K. Right? So yeah, I'm going to be prepared for that mentally. Even if I can't prepare for that in my portfolio, which by the way, you absolutely can. Right? Don't tell me that you have to be 100% in Bitcoin or 0%. That's not how markets operate, right? So you can play whatever degree of comfortability in between there, right? Between 1 and 99 to whatever extreme that you're able to justify and warrant based on your discretion and your personal situation, right? I'm not going to tell you how to trade. But when the probabilities start to break down, or even if there's a possibility for something to break down and then lead to a higher probability outcome to a more significant degree, right? Snowball to snowman, I'm going to acknowledge it. I'm going to be at least mentally prepared. So, yeah, you're going to hear me talk about what happens when this market breaks down. If that to you means that I'm quote unquote bearish at range lows, and as a couple followers have kind of like accused me of being, then I honestly just think that it means that those people lack critical thinking skills, right? The ability to play chess, but from multiple standpoints and using multiple strategies, not just playing into one strategy and hoping that your opponent does not recognize the exact, right, cookie cutter fucking movements that you're applying. That's only going to work to those people who are ignorant to the strategy that you're applying, right? Otherwise, you're not going to be a great chess player because you're only going to beat those people. Every other great chess player is going to recognize what the hell you're doing and apply a counter strategy. You then have to counter that. You have to know how you mend off into the next alternative to then counter their counter, right? And it's not just one. There's 4 different counters that they can play into once they recognize what strategy you're approaching. And you have to recognize which counter they're approaching with. And it's a back and forth chess match, right? And the irony is, I understand this concept, and yet I fucking suck at chess. I'm more of a chess appreciator, right? I enjoy watching chess, but I absolutely suck at it. But here's the thing, though, right? So you hearing me potentially be like a doom poster. Hey, what if? What if this happens? We probably go to 70K. I'm not going to be bidding 85 because that wouldn't make any sense to me. So you're hearing me be this doom poster, right? So what about the other times that the market showed the same degree of significant weakness, and then we adapted to it and we started to doom post all the same? What happened then? Well, we were wrong, right? We were just incorrect. I thought the market would break down here. High time frame trends, 200 daily moving averages is actually the trend that we were using at the time. And we lost 4-hour 200s well before that. Right? People accuse me of being bearish at the bottom. That's never how that works, right? It's not like I flip bearish at the bottom. Wait. This time I did, right? This time I did. I was flipped bearish at the bottom because I thought that was a breakdown and it wasn't, and we adapted, right? We readjusted. We said, hey, we're reclaiming local trends. We probably get to range highs again. So I flipped bearish at the bottom there, but 90% of the time, it's not like I'm flipping bearish at the bottom. I am gradually gaining bearish momentum. And then as the bottom is being put in, I'm peak bearish, right? I'm peak bearish when we lose that last remaining level, that last line in the sand, my last bullish argument. And then, for the remaining price action thereafter, I remain the same level of bearishness. The same way that I'm not any more bullish at 50K than I was at 33 and really 28, right? It's the same argument. I'm making the same analysis. I'm the same degree of confidence. All that has changed is the y-axis has changed. That's it. So I've been proven correct. Cool. I already thought that I would be correct, right? I already had that conviction. I already made that analysis. I already assumed that the market would do that. I already positioned for it. I already did this. I already did that. So it's not like I'm gaining confidence. It's not like I'm as number go lower, I'm more bearish, or as number go higher, I'm more bullish. That's not how this works. So when the high time frame trends break down, I start to gain that bearish momentum, right? Hey, we're breaking daily market structure, and we're breaking down below this local range, right? That was the local trend analysis. We're losing the high time frame trend, which looks something along, these lines. And it's pretty choppy, and then we reclaim it, and then here we are losing it again. So we're doing bearish things. We probably at least get to 200 dailies. We'll see what happens when we get to 200 dailies. That's the last line in the sand, though, for me. And then we lose it. So I don't get to make the same, oh, guys, it's fine, just zoom out. We're still bullish, just on a higher time frame. You have to zoom out to the higher time frame to see it, right? Or even here, we could have made the same argument. So this is kind of not a great example because that was the USDC DPEG for anyone that remembers. So I wasn't really using technical analysis. I was just kind of trading fundamentals at that point, which has only really happened once in the past 4 years. This is the only time that I've traded fundamentals in the past 4 years. Anyways, so we lose that high time frame trend, right? That's my last line in the sand. So that's when I gain even more bearishness. Now I'm even more bearish than I already was. I already thought that we would get to 200 dailies. Now we're at 200 dailies and we're losing them. So now I'm even more bearish, right? I'm going to tag on that bearish argument to the momentum that I already had. The snowball is continuously gaining and getting closer and closer to a snowman. I have to be able to acknowledge that. For the next 2 months, we chop sideways. For the next 2 months, every rally is retraced entirely, and we make a lower low. Until finally something changes. We reclaim that trend. So do you think that after 2 months, I have been traumatized by retraces, right? By calling for higher highs and then getting lower highs and then retraces and then we make a lower low. So that by the time that we reclaim the trend, I'm not able to call it a reclaim. I'm like, nah, guys, don't you see that we're just sweeping the highs? Don't you know that we're just still inside of a 7-month long range? Why would you care that we're back above 200 dailies again? Why would you care that this is how the 4-hour 200s look like? Why would you care? No, don't you know that even though the daily market structure is bullish, don't you know that all we've done in the past 2 months is downtrend and retrace every single pop and every rally and make a lower low? Do you think that's the analysis that I made at that time? It's not, and I have the receipts to prove it, right? It's not the analysis that we made. We were bearish at the bottom, and then we gradually gained our bullish arguments once again because the market didn't do what we thought it would do, and instead it's doing something different. We have to adapt to that. We have to now change our chess strategy if we want a chance at continuously beating the market, right? So what was the analysis? Oh, the reclaim that looks like a reclaim, the uptrend that looks like, smells like, and trades like an uptrend. It's probably an uptrend. That was probably the bottom in hindsight. I didn't think it would be the bottom there. I didn't think we would range, at that support level. I thought we would break down below it. But we didn't. We didn't break down below it. We held it as support, and now we're back above key trends. Now we're uptrending on the daily. Now we're back above, 200 daily moving averages, and we kind of have every reason in the book to just break out of the range entirely, right? We scaled the analysis. We scaled the assumptions. Even though the at front face value assumption is only, hey, we probably go from mid-range to range highs, right? And that's a nice 10% move. We scaled. We said, I don't even think we would stop at range highs. I think we would break out, right? Because what's the greater trend? What's the border for that puzzle piece? What's the bigger picture? Oh yeah, this is a massive bull market kind of rally, right? We're uptrending, so maybe we just break out of the range entirely. And then we broke out of the range entirely, and we continued uptrending. So I was wrong, except for I managed to still be right later down the line. How did I have the balls, the conviction, the courage, the capital to be right for the next rally? I wasn't the babbling idiot saying, oh, just buy the lows. Oh, buy the sweep of the lows. Oh, don't you see this bull div? Nah, don't you know that that's a major sell-off? And yeah, just, this is a liquidation cascade. You should probably just buy the dip. Yeah, buy the dip. Yeah, buy the dip. See, I fucking told you to buy the dip, you idiots. Buy the dip of the dip that kept dipping, the sweep of the lows that swept the lows that swept the lows that swept the lows of the sweep of the lows that swept the lows, right? No, we didn't say that. We said, oh yeah, this is a downtrend. Oh, we added on bearish arguments? Well, that fucking sucks. These are all bearish retests. We might go lower here. We might break down, right? We preserved our capital so that the next time around, the market said, oh, by the way, this might be one of the few times in the year where the market gives you a crazy fucking bull market rally, right? Remember how it only happens 80% of the time that you're trading markets, it's really, you're getting a bunch of bullshit price action, right? This is a nice 2-week range. This is, I know it doesn't look like it, but that's a month and a half of sideways. This is 7 months of sideways. Oh, you want to capture this uptrend? That's cool. It lasts for all of 2 months. Oh, you want to capture this one? That's cool. It lasts for all of 2 months, right? 80-20. So how is it that we have the courage, capital, balls, conviction, whatever, right, to go and participate in the few times in the market where it actually gives us something substantial? We preserved our capital during all that bullshit. during the 2 months of lower highs and downtrend and choppy sideways where there's not really a ton of opportunity, even though opportunity is still abundant, right? We still had Pepe got created somewhere in the middle of this summer range in 2023. That was a nice cook, right? Remember hamster races? Remember how stupidly euphoric the market was, even though Bitcoin is trading in a 15% range? Yeah, that was cool. So the opportunity is still abundant, but obviously it's more abundant at times. So how do we make it to those times where opportunity is so damn abundant that you start coming into these streams where you're like, oh my God, Mercury, my watch list is 100 coins deep. How do I whittle it down to 10 coins? Mercury, I don't have enough money to trade everything that I want to trade, right? I want to be positioned in this, that, and the other, and I want to be, have some side capital to take some side bets as if this were blackjack to go play some NFTs on Solana and some, stupid meme coins that might run 100x. How do I manage to have the exposure, right? I don't have enough capital. Mercury, I don't have enough time in the day. I'm overwhelmed. Mercury, I feel like I've missed out on the moves. How do I make sure that I regain my mental state so that I'm not, feeling as though I missed out and that I'm able to capture so many of these opportunities because everything's just running like fucking crazy right now? How do we make it to that point in the market? You had to have adapted to this point in the market. That's the only way. And so here's the thing. The market itself has not destroyed you for not adapting. Do you understand that? Because these sell-offs have been so mild, right? We lost a high time frame trend, guys. A high time frame trend that we had not lost in 90% of rallying that occurred over the course of more than 3 months, 3.5 months. 3.5 months, 90% trend. When that trend breaks, are we just looking for a measly negative 10% push lower before we run it back turbo? No, that's not what we're looking for. We're looking for a proportional kind of degree, right? A 90% uptrend, 110-day uptrend. We're not looking for 2 weeks negative 10% and then run it back turbo. That wouldn't be logical, right? It's not logical. It's not what happened. We didn't continue negative 30% or anything along those lines, but that wouldn't make sense, right? From just a logic standpoint. So that's not what we called for. But if you didn't call for negative 30% and you just said, who cares? Just zoom out, idiot. Just zoom out, idiot. Just zoom out, idiot. If you just kept saying that, eventually the market rewarded you. If you just kept saying that, eventually the market rewarded you. The market rewarded you. The market rewarded you. Market rewarded you. And you just had to be delusionally bullish. That's it. That's all you had to do. You didn't have to press the red button, really. You just had to keep holding. You just had to say, who cares? Don't you know it's still a bull market? Don't you know? Just zoom out. Don't you know that the weekly is still bullish? Don't you know that this, that, the other? Right? Even though your weekly market structure does not get invalidated until, right there. Right? That's the next high or low on the weekly. So, don't you know the weekly's still bullish? Why would you care? Why would you care that we're downtrending? Why would you? Who cares? Oh, guys, we're bearish now. The weekly structure broke. That doesn't make any sense, right? So we don't want to hold on to that analysis. We don't want to be in that kind of mindset. We don't want to approach the market that way because guess what? All you had to do was say, shit, maybe this leads to something much bigger. And then it doesn't. And then we break out and we reclaim the same fucking trend all over again. And then we break out of that 1 month range. And then when we broke out, we said, I know that Mercury, I was bearish at the bottom. That's cool and all. But yeah, we're probably going to keep ripping the same way that we were ripping for these 3 months and 90%. And yeah, we called it a rip, right? We said we probably would rip over the course of 3 months, maybe 90% degree. Yeah, we probably do the same thing. And then we did the same thing. Right? And then here's the kicker. We adapted once again. Oh, guys, by the way, yeah, now we're losing high time frame trend again. And then I didn't think that 12-hour 200s, I actually kept using 200 dailies. And so again, I'm bearish at the bottom. But again, we go, remember that reclaim? Yeah, you see how we're reclaiming this trend once again? That's the same thing that we said here, isn't it? That's also the same thing that we said here, isn't it? Or here. Which, by the way, that's the same thing that we said here. And that's also the same thing that we said here, too. And that's also the same thing that we said here. Yeah, so it worked, it worked, it worked, it worked, it worked, and it worked beautifully 5 or 6 times in a row. Why wouldn't it work again? And then it didn't. This is the epitome of variance. We did the same thing. This is the same trigger of which we argued back in February, which is the same trigger of which we argued back in October, which is the same trigger of which we argued back in June, which is the same trigger of which we argued back in March. Same thing, same reasonings. If I were to give you the analysis, you would not know, am I talking about February? Am I talking about October? Am I talking about June? Am I talking about March? You would not know which one I'm talking about because the analysis is the exact fucking same. But we got a totally different outcome. 12%, we developed a resistance level, so we tapped that resistance. Then we lost the trend. Then we put in a lower high in the weekly. In hindsight, right, this is where we're like, shit, we probably put in a lower high in the weekly. That's a lower high in the weekly now. Shit. That changes things, doesn't it? And then we adapted. I don't need the market to go 80% higher here over the next 2 months, even though that's what I thought would happen, right? The same way that I don't need the market to pull back negative 30% here and then continue lower for the next 2 months to allow me to position at 31K or whatever the fuck and then run it back turbo from there. That's not what happened, right? I didn't need it to happen. That's what I thought would happen. It's not what happened. I adapted anyways. You are only ever as good as your ability to adapt. I don't care how great your most recent trade was. I don't care if you're managed to miss out on all the drawdown from 106K into 90. I don't care if you've been doing well the past 2 years. That means absolute fuck all. Can you adapt? Can you adapt? Can you be wrong and still find a way to be right? Can you? Yes or no? If the answer is yes, you probably have a great chance of navigating markets and extracting value. If the answer is no, all that has happened is that your demise has been delayed. And that's probably the worst thing that could happen, right? Consider my experience back in 2018, 2019, leading into March 2020. I only wish the market would have humbled me sooner. I wish that it didn't take 2 fucking years for me to finally realize that the manner of which I was approaching markets would eventually lead to my demise. Because if it wasn't March of 2020, maybe it would have been March 2022. Maybe it would have been 4 years, right? Maybe it would be this most recent liquidation cascade, which was, by the way, guys, the greatest fucking liquidation cascade in all of crypto history from a monetary standpoint, right? That right there, right? Not FTX capitulation, not any of the negative 30% daily candlesticks in 2021 that we talked about, not BTC having, right, negative 50% in April 2021 in the span of like a week, right? No. Not any of that shit. This measly fucking move from range highs to range lows, a negative 10% sell-off. Oh yeah, by the way, greatest liquidation cascade in all of crypto history. If it didn't happen to me in March 2020, maybe it would have happened to me in February 2025. I only wish that instead of March 2020, maybe it would have happened in March 2019, and then I could have gotten on the right track, the right path sooner. And then my gains would be that much more exponential because I had that much more of a jump into the winning mindset, into winning philosophies and playing markets the right way, as if they were chess, right? That kind of manner, that kind of approach. So I'm going to adhere to the same winning philosophies that I've adhered to since however long you've been with me. I was going to say past 2 years, but the reality is I've been doing these live streams since August of 2020. A lot of you guys, I see Edmund in here, have been with me since 2019. So however long you've known me for, that's how long I've been playing into this mindset, right? Or really since March of 2020 at least. So got my ass handed to me. But I'm going to keep going with the same philosophies, same principles, right? If we break down below massive, key levels, I'm not just going to look at the market and say, who cares, right? You've only ever given me negative 20% sell-offs the past 2 years. You're not going to go more than negative 20%. You're just going to V reverse, right? Surely. I'm not going to do that. So I have to be adherent to philosophy, not to what just most recently happened, right? Not, hey, every other time that I bought the 4-hour 200 MAs reclaim, it has led to 70% 2-month long, breakouts. Because if I would have said that here, it wouldn't have worked. I would have been reliant on a 2-month long 70% breakout. And even though the trigger was the exact same, I would have gotten an entirely different outcome. And I'd be ruined, all because of variance. That's it. I was expecting my opponent to play their knight. Instead, they played my queen, and now I blundered my queen. Right? All because I needed my opponent to play their knight. If they did anything else, I didn't know what to fucking do. That's not trading. That is the exact fucking opposite of the position that you're trying to put yourself in. Markets are the epitome of freedom. You want to allow yourself the grace to be free in however you're approaching and executing on the market. You never want to feel like you're forced into something. You never want to feel as though the market has a hold over you or that you are reliant on it, right? Now you're just passing up, okay, greater entity, you take the wheel. Market makers, surely you're going to run this higher for me. No, that is not trading. You have to take control. You have to be in control of whatever you can control. You cannot control, is this 4-hour 200 MAs breakout going to lead to a 70% rally? You don't get to control that. I hate to break it to you. So you just have to play things however you see fit, right? Best however you see fit. Whatever makes the most sense to you. Whatever brings you peace and brings you comfort so you can continuously play the market freely on your own will. And you know what the beautiful thing about that is? Once you survive this market long enough, this is fucking crypto, right? I'm getting a Kaido airdrop tomorrow. I don't know how much it's going to be. People are telling me that I should be expecting 6 figures. I don't know if that's true or not. We'll see what happens, right? I really don't expect that much. Market in terms of airdrops has never been that kind to me. But yeah, this is crypto, right? We're talking about is it going to be $10 or $100? Airdropped. Free money, guys, for shit posting on fucking Twitter. This is crypto. You survive long enough, eventually an opportunity is going to fall into your fucking lap. Trump coin was that opportunity for me, right? I hate to say this, but it really was, right? It was so smack in the face. Oh my God. Everyone loves to quote this MNGR tweet 5 times a year, this free money on the floor, pick it up, do nothing, outperformance. My thought process 4 hours after that coin got listed, and he tweeted about it across several mediums, and I could verify that it was legit at that point. That was my first time seeing it. It was 3 or 4 hours after it had already gone up. It was already at $5 billion market cap when I saw it. My instinct was, the US president just made a coin. Shut the fuck up and bid. It was high conviction. It was smack me in the face market and basically force my hand to take this opportunity because it feels like free fucking money. And then it 10x'd in the next 48 hours. You underestimate how valuable surviving is. You grossly underestimate it. Would I have had the courage, the capital, the conviction to go and play that coin the way that I played it so that I could call my mom? Because I did. I called my mother after that Trump coin trade. I said, Mom, you're never going to believe this, right? And I explained it to her. She thought it was wild. She thought it was crazy. She was very happy for me. How did I get to that position? Would I have called my mother to bask in the glory of that trade, of that opportunity, if I had gotten my ass handed to me during one of the massive liquidations, right? Do you know that prior to this biggest liquidation in all of crypto ever, This was the biggest liquidation in all of crypto ever. Were you aware of that? Again, negative 10% moves. Oh yeah, prior to this negative 10% move, the biggest liquidation in all of crypto was that negative 10% move. How fucking dumb do you think that these people feel right now for getting liquidated on negative 10% movements just for the market to still be trading at 99K 2 months later? Do you think that they have the courage to bid the next reclaim? Do you think that they have the capital to bid the next reclaim? Do you think that once the market does break out into price discovery, they will call it a breakout of a massive range and not, nah, it's just a deviation? Don't you know we're going to fall back inside of the range? Don't you know that we're heading for a recession? Don't you know that stocks made a new all-time high for the 18th millionth time in the past 2 years? But this time it's a sweep of the highs, unlike the other 18 million times. Why? Well, because I'm traumatized, because my portfolio has been cut in half in the past 2 years, even though the market has gone up. So I'm hoping for a recession, so I want the entire world to burn because, the world has been mean to me. That's reality. Don't be in that position. How are you not in that position? Well, I preserved my capital. Well, I made sure to survive the drawdown. Well, when the market broke down below key trends and key levels and started creeping closer to my stop loss, I cut the trade, right? We just had this discussion, by the way. We just had this discussion on Solana. In, what's today, Wednesday? Yeah. So in Monday's live stream, I was talking about how Solana was trading somewhere around here. And I was like, if I wasn't in this live stream right now, I would be cutting my position on Solana. That's my exact words, quote for quote. We can go back and see. So if I wasn't in this live stream right now, I'd be cutting my position on Solana. Technically, this is my stop loss. So that's truly where I'm invalidated. But my discretion kicks in and says, I need to cut my position right here. And I can't really put a finger on it. I can't force you to see things from my perspective and my, colored lens. I can't apply my discretion onto you, right? I'm not going to give you an insight into my brain. I can't do that. I wish you could download my thoughts and understand them with the utmost clarity, but that's just not reality, right? Maybe it will be in 5 years thanks to AI. But for now, it's not reality, right? Maybe Elon is working on that with Neuralink. I don't know. So my discretion kicks in. I want to cut the trade. That's the thing that was, clear to me. And so right after the stream, it actually helped me. We were up like 0.5% from where I said that. And I was like, cool. I'm still going to cut the trade. It still looks like a breakdown to me. If Solana were trading here right now, do you think that I'd be calling my mom to sulk? Do you think I'd be telling her how I just fumbled generational wealth, even if Solana did this? Right? Hey, Mercury, you want to buy a reclaim? Oh, that's cool. Have fun staying poor, idiot. Can't believe you sold the lows. By the way, I did this exact thing on Pepe a long time ago. Where is it? I want to say it was this range. Yeah. So I did this exact thing. I cut at the bottom, and then Pepe didn't give me another setup. So my setup on Pepe was, okay, I should buy the reclaim of this range, buy the high time frame trend. It's probably the best place to put in a higher low than here. So my stop loss and validation is not that clear. Obviously, I'm not going to have, a negative 27% stop loss on Pepe. That just wouldn't make any sense. So my stop loss, I'm going to hide it, let's say there, right? Let's zoom into the 4 hours so you can see what the hell I'm talking about. I'm going to hide my stop there, just below this microstructure. And yeah, I'm going to target not just a move from, range lows, mid-range, range highs, also an expansive move, right? Because this is the last resistance level before Pepe goes into price discovery, right? That's all that we have developed. So I get to target price discovery. I get to target infinity. Let's target big. 15R trade, right? Wow, amazing. So I took this setup and I closed it at the Pico bottom. I'm not kidding you. You see that little wick right there? That's me exiting. Because I wanted to be cutesy and I wanted to say, I gave myself this invalidation, but this looks like a breakdown to me via my discretion, right? Some of you might argue. I'm not kidding you, right? You want to rub some salt in the wound? This is how your crypto Twitter timeline can really get the worst of you and start to become noisy. I then went and looked and I saw CBS. I'll never forget this. CBS then had his range low drawn like this. So on CBS's chart, it looked like we were perfectly testing that region. But the way I had it drawn, it looked like we were breaking down below that region, right? This made more sense to me. This was the trend that I actually wanted to use. I believe I was actually using 3-hour 200s, not 4-hour. All right, so that's my trend portrayal. So in my brain, that looks like a breakdown. That looks like I need to be cutting. That looks like I'm already wrong, but just I'm not technically wrong. But the market soon enough, right? Give it a couple hours, maybe a couple days, it's going to show me that I'm wrong, right? Then what was my alternative? I had so many options thereafter. Do you want to buy this reclaim? Because that's your new invalidation, right? We're back above the trend. We're, back inside of your range, Mercury. This is now the most recent low. So any sequential setup that you go and tag on based on the same premise, you get to use this as your invalidation now. Do you want to do that, Mercury? Oh, but I have a hard set rule, guys. This is one of my rules. I'll never take the same trade twice. You know why that's one of my rules? Because over the course of my trading career, I have taken the same trade twice. I have taken, let me buy Pepe here, but then sell it, but then buy it back. And listen, there have been times where Pepe then rallies, right? And then me taking the same trade twice rewards me. Good thing I took the same trade twice. But there have also been times where I take this Pepe trade, I close at the lows, I take it again, and then I'm forced to lose once again. You know what's the only thing more infuriating than losing once on a trade? Losing twice on the exact same trade idea. That's the only thing that's more frustrating than losing once, right? So yeah, and here's the downfall, and here's the reality. Because now I've instilled this like very much like, hey, I'm a trader. Let's think in RR terms mindsets. So your brain has immediately gone to Mercury. Why the fuck would it matter, right? You close Pepe for 0.5 R loss. Okay, you take it again. You lose a full R. You're only down negative 1.5 R. But if you were to take that Pepe trade the second time and capitalize on a 10R gain, then you're up 9.5R. So it's drastically skewed in your favor, asymmetric probabilities, right? Why does it matter if you're taking the same trade twice or not? That's cool and all. I'm so glad that you're able to break things down on paper. We can think about how we want to think about, markets and rationalize markets and trading and setups and perceived probabilities and RR and blah, blah, blah on paper. But guess what? We don't live in a paper 2D Mario kind of bullshit fantasy land. We live in reality. When you are frustrated because you've lost on the same setup, you traded something, got chopped up, took a loss, traded it again, took it another loss. Now you are a different version of yourself. You are someone who's cracked mentally. You are potentially now slipping in terms of your mental state. Now you're less confident. Now you're more hesitant to take the next setup thereafter, even though it's just as appealing as what that Pepe setup was. But this time, long-term winning philosophy, it might work out, but this time you don't take it because now you're coming off of a 2-loss streak because you lost in the same trade twice, and it's really frustrating. And now you've missed out on a 7R trade because you're traumatized from your recent 2 trades, right? And now, because you missed out on a 7R trade, because you were traumatized from the other 2 trades, now you start to try to overcompensate. Now you start to take, variations of that same trade setup, but on the 5-minute chart. And that's not usually your style, but somehow today it is. But Mercury, you're always the person that comes to us and says, yeah, if you find me on the 5-minute, if I have to go to the 5-minute to trade this trend, yeah, you lost me. That's not where I thrive. But how come you're trading the 5-minute chart today, Mercury? Oh, and you got stopped out on your 5-minute trend? Aw, that sucks. Now that just adds to the frustration, right? Now we've taken 2 losses back to back on the same fucking trade. Now we've missed out on a trade setup. We didn't actually have a good reason for not taking it. We just decided, nah, I don't want to take it this time around. Probably because of the way the other domino effect, right, led into this scenario. And then because we missed out on that trade, now we're finding ourselves branching off and doing things that we usually wouldn't do. And now we're taking losses because we're not playing into our strengths. And now all of a sudden you look back and you've passed up on 18 opportunities because you've been too busy micro trading the market, a strategy that you've never applied before. and you're losing money. You look back and your account is down negative 10%, and you just missed out on one of those times throughout the year where the market trends like fucking crazy. The entire epitome of what you have curated your system for, Mercury, you missed out on a 3-month-long 180% movement on Pepe, Bonk, this coin, that coin, that coin, that coin, that coin, that coin, that coin, all because you tried to force the same trade setup twice. I have experienced both sides of this. I have experienced the times where I take the same setup again and I gain 3, 4, 5, 6, 10 R. But the loss that, when I lose on that outcome, mentally I start to slip. I've found that to be something. I don't know why it is, right? I can't tell you. I'm not a psychologist or psychiatrist, whatever, right? I can't break it down to you as to why I feel those emotions. Because literally, I could lose on Pepe, go trade Bonk, lose on Bonk too, and I'd be totally fine. And it would not even, sway me in the wrong direction. I wouldn't think anything of it. It's not like I've never taken a 2-loss streak before, right? Let's be realistic. I mean, that's nothing new. I've done that a million times, so no big deal. But for whatever reason, when I take the same trade setup twice in a row, it frustrates me. And I lose twice in a row. It frustrates me. And that leads to that domino effect, that slippery slope. I have found this out about myself through experience, right? Through time in the market, time trading the market. So, okay, I'm not allowed to go trade Pepe. I would have been able to trade, if this is a higher low into that same exact trend. Well, that's not the same setup. That's a variation of the same setup, right? I'm not trading the same region. There's time has passed by. It's not really traumatized me at this point anymore. It's a totally different kind of structure or context. Now we're at mid range with high time frame trend support, high stop below previous structure, right? Technically this, we would probably use that and then run it back turbo, right? Nothing spectacular, just trend continuation at that point, playing off of the same thing that has already worked up into this point. So if that would have triggered, then I would have been able to apply it, but it never triggered. So consider this. I took a trade setup that the way I had it drawn would have yielded, if I had a crystal ball that told me where the top would be, right? Unrealized 11.8 R. I closed it at the bottom. I took half an R loss. I then missed out on the entire rally. So surely this is not a good story, right? Surely this leads to demise. Surely Mercury got his ass handed to him scalp trading a 3% range on BTC in the same time period, right? Surely that's what happened. There's not a good ending to this story. Except there's an amazing ending to this story. I took the exact same philosophy, the exact same concept of a setup, and I applied it on Bonk. And I said, Bonk is giving me the same kind of setup. The range low makes even more sense to me, right? Doesn't this look cleaner of a range low draw, right? And maybe some of you agree with me, maybe some of you don't, right? If you're CBS, you probably didn't agree with me, but I think in my head, the way that I have this drawn, the range low makes even that much more sense to me. And oh yeah, the trend is pretty good too. The 3-hour 200s, yeah, they have a nice history, both locally and historically. So, I can go trade Bonk instead, right? Pepe's not giving me my setup, but Bonk is. And kind of similar to how we thought about Lido in recent weeks, right? Even though we're below the high time frame trend to, on Lido, it was negative 15% below those 12-hour 200s. Well, what's the context though? What are we playing into, right? We still understand that we're trading, a much greater range. We're trading this as an inflection point generally. Go check Friday altcoin watch list during this time period. We talked about Pepe and we talked about Bonk. I didn't make it on Pepe, but I made it well on Bonk, right? Bonk drastically overcompensated for those gains. It then rallies 100% thereafter. Oh, but Pepe was the outperformer, right? Because it was trading into price discovery. So Mercury, From a textbook standpoint, you should not have been trading bonk. You should have only been trading Pepe because that's technically the relatively strong outperformer. You need to be focused on that, blah, 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 blah. And guess what? You're absolutely right. Pepe rallied 180% into price discovery. Bonk only rallied 100% into its previous all-time high. And then they both broke down. I didn't even trade the strongest of the strongest coins. I didn't even trade it well, actually. I traded it poorly. My execution was piss poor. I closed at the literal fucking Pico bottom. I still walked away with close to 10R during the same time frame, in the same time span, just because I took the exact same philosophy, the exact same concept, the exact same trade setup, and I applied it to a different ticker. And that was something that I was comfortable with. I created my own results. I didn't sit there and sulk that I closed Pepe. I didn't sit there and wonder how should I trade this next and try and force a position on the 5-minute chart because it wasn't giving me my pullbacks into the 3-hour 200s or whatever the fuck. I didn't do that. I just said, okay, on to the next one. And I went to the next one and it happened to be bonk. I saw a great opportunity and I played it and then I won. The market rewarded me. Isn't it amazing when long-term winning philosophy wins long-term and drastically overcompensates for any slip-ups or lapses in judgment or execution or unfortunate results? Maybe I got wicked out on the trade. Maybe my scaling of assumptions for my stop loss on where I put it for Pepe, maybe I didn't close it preemptively, but I just got wicked out, right? At the Pico fucking bottom. I just placed my stop loss, at a poor region. And then Pepe rallied 180%. Whatever, man. That's fine. Winning philosophy wins. Winners average winners. It doesn't matter how I traded Pepe, because over the course of the next 10 trades that I take, whatever happened on Pepe, my profitability is either going to be added onto or compensated for. I'm going to compensate. If I lost on Pepe, that's fine. I'm going to compensate for it. I will still be profitable. If I won on Pepe, great. Now I have an even better story to tell you because then I would have caught Pepe and bonk. Doesn't matter. Winners win. This is the point. So again, when we talk about this and we apply it to something like Solana, or what happens if, 12-hour 200s break down and Mercury, you're so adamant on don't buy 85K, but what if we only go to 85K and then we reclaim the trend again? What if that's the bottom, 85K, as everyone kind of said it wouldn't be because we, are doing something largely significant and we can think bigger this time? Then cool. That's the same fucking story as to what I've gotten used to throughout the past 5 years. Do you know how many times I've had to run through this exact same concept? Hey, if what I think is going to happen doesn't happen, I need to make sure that I'm ready to do this, that, the other, blah, 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 blah. It's just any other ordinary day in the market for me. Why is it so spectacular on Solana this time around, February 19th of 2025? It's not. It's the same fucking thing, right? The same kind of mental game that I've been playing with the market, back and forth, ping pong. I moved my chess piece, you move yours. I'm always going to adapt my strategy based on how you've moved your chess pieces, market. It's the same fucking thing over and over and over and over and over again. Consistency, right? Consistent profitability, consistent thought process, consistent strategy, consistent execution. It's all consistent. It leads to consistent results, right? That's the epitome of it. If it didn't, it would be contradictory. So what is the consistency here for Solana? How do we have a plan, but at the same time have a backup plan, but at the same time have a backup plan for our backup plan? Well, currently, right, or recently, we said Solana's kind of teetering on the edge of a cliff here, starting to break down below 200 daily moving averages. The idea, maybe the 200 daily moving averages in this massive region holds the same way that it has the past few times around. So that's the concept, right? We position on Solana and we look for, a bigger rally. We look for eventual local trend reclaim, right? Maybe the high time frames trump the lower time frames and we prioritize that outlook as opposed to a more local outlook. The same way that we have the last few times around, except for, it's starting to teeter, right? It's starting to like really threaten. This kind of looks like we're falling off the cliff here. Man, if I wasn't hosting this live stream right now, I'd be cutting my Solana position. I did. I went and cut my Solana position, right? So my analysis here today is, well, Solana has broken down below all my bullish arguments, my last lines in the sand. We're losing a 2-month long range, right? We are breaking back inside of an 8-month long range. That's not good. That means that this is a deviation. Deviations imply we did something outside of the norm only to resume the norm. What is the norm in range trading? Lows, mid-range, range highs, mid-range, range lows. Oh, so we did something outside of the norm, but we're here resuming the norm, so that means that range lows, mid-range, range highs, mid-range, range lows. Oh, also, at the same exact time, right, we're locally downtrending. We already knew that, though. We're breaking down below this 2-month long range. Oh, and we're losing what has historically been very good at representing massive kind of movements in either direction, right? This is a little bit nuanced and contextual because greater than this time frame, we are still trading inside of a massive range. This is nuanced and contextual because greater than this time frame, we are still trading inside of a 6-month long range. So we can, yeah, it's kind of different those times around, right? We wouldn't put so much emphasis on the 200 dailies, but it's definitely not good that we're below them, or it is favorable that we're above them, right? In either aspect, right? Favorable here, we used it as an additional bullish argument to the more actionable analysis that we were making on lower time frames at the time. And so now that we're losing all of these key regions, what's my at face value assumption? We probably go to 120. We probably go lower. All of these arguments have lined up to say that this is what I should anticipate next, right? But Mercury, what if, and then it doesn't matter what you say next, I always have a plan. I always know what to look for if what I'm looking for currently does not happen. So if the market does not get to 120, then what do we have to do? We have to start reclaiming trends. We have to get back above this resistance level, right? Which is also previous support for this 2-month long range. So then we would be deviating back inside of this range, right? Range lows, mid-range, range highs. And we would go from there. Oh, and at the same time, we would be reclaiming a very nice, very reputable local trend. Hourly 200 moving averages have done a very good job of representing, yeah, don't get too antsy just yet. Yeah, don't get too antsy. Yeah, maybe nothing's happened yet. Maybe don't get too excited. Oh, we're reclaiming those? Oh, at the same time, we're back above 200 dailies. Oh, at the same time, we're deviating back inside of this range again. Oh, okay, maybe we don't go to 120. Then we can execute on that analysis, right? Then we can take it from there and see how that works. You are never as good as your, however profitable you have been the past 2 months. You're not as good as, oh, I've done well for myself the past 2 years. You are only ever as good as your ability to adapt. If you cannot adapt, you are inherently, therefore, reliant on the market to do X or Y or Z. And if you bet on Y and X or Z happens, you are absolutely, totally, 100% fucked. That's not trading. So the Solana setup has now turned into a potential trigger trade. Does that word or those two words sound familiar? Because it absolutely should. If you go look at the Friday altcoin watch list at any point the past few weeks, you've gotten very familiar with this term, trigger trade, right? And the mantra that I always follow that up with is, if there's no trigger, there's no trade. You're not going to hear me draw, rough draft setups of reclaims and, hey, if this happens, let's just hypothesize, how would it kind of shape up? Let's say that this is our microstructure low, even though technically we would want to use this as our low, right? We can say, that's probably good enough, whatever. and then we reclaim, and then right we can look for a position because that's also a deviation back inside of this range. And so maybe we go back to range highs. Okay, so now we're getting somewhere, we're adding to our thesis. We now understand what we would target next, we know where we would hide our invalidation, we know roughly what we're looking for in the form of a reclaim. Okay, cool. So we've drawn out this setup, right? You'll never see me draw out this setup, create rough drafts, develop a plan, a strategy, and then say, yeah, that's cool and all, Mercury from yesterday, but Mercury today thinks that this is a bottom, and so that's the low. I'm hiding my stop here, target continuation. What? What was the fucking point in drawing up a plan then? What was the reasoning behind taking your time out of your day, right? Your precious time. There's no currency more precious than time. Why the fuck did you even waste your time drawing out that setup then? If you're just not even going to listen to it or wait for it. You're just going to, say, crumple it up, throw it into the fucking garbage can. Here's what I think today now. Why exactly? Did you not know that the market might put in a slightly higher high on the maybe like 1 minute chart? No, it absolutely could. It still wouldn't change your thesis, though. It wouldn't change the way that you went to go trade that market. Here's the thing. I'm not saying you are not allowed to trade Solana until it breaks above hourly 200s, or else I hate you and you suck at trading. That's not my point. My point is you develop a plan for yourself. Whatever your plan is. If your plan is genuinely to buy the 5-minute 200 MAs reclaim, you better fucking be buying the 5-minute 200 MAs reclaim when we reclaim it. You better not, I'm going to buy this reclaim. Yeah, I can't wait for that reclaim so that I can buy it. And then somewhere in here, you're like, yeah, we'll probably reclaim it though, right? Surely we'll reclaim it this time. No, dude, you just broke your own plan. You just said, screw what I said 2 days ago from a calm state of mind. Here's how I feel today from an emotional state of mind, right? You trumped the nice plan that you had set in stone for the impulsive action that you're succumbing to here today. That's not good trading. It's still trading. It's not good trading. So make sure that you're developing some kind of strategy that you can adhere to, both pros and cons. Because guess what? If you're betting on reclaims, if you're assuming that the market is rainbows and butterflies and dandelions, and the market is going to give you a reclaim, pullback, hey grandma, I don't know if you realize this, but the past few days, Solana's been reclaiming hourly 200s. It might go to 260. I know, I'm leaving you a voicemail, grandma, because you're not very, tech savvy. You'll probably get this on maybe Saturday after bingo is done, and it's currently Wednesday. But maybe Saturday you can buy Solana, grandma, because it kind of looks like it's going to go back to 260 and maybe even price discovery. Is the market always that kind to us? So no, you have to have a backup plan for your backup plan. What happens if this happens? What are you going to do? The market said, oh yeah, by the way, we're back above hourly 200s, except for hourly 200s all the way down here, and here's price, and there's a difference of negative 11% before the region where you would even ideally like to bid. Much less your invalidation is all the way down here, right? So, yeah, have fun staying poor. You're not going to be able to justify taking that setup, right? Because at best, you're taking something, you are market aping, and yeah, congratulations, you caught this 27% move. You now captured 1.25R, right? You're going to go call your grandmother again, call her back and say, wow, I just made so much money, right, grandma? No. So you have to have a backup plan for your backup plan. This is the exact epitome of what happened last time, where I deliberately decided not to bid this region. And I told myself, I'll bid, 4-hour 200s get reclaimed this time around. I would actually think that that's more of a convincing reclaim, right? Along with, breaking out of this level. So if you manage to reclaim that, then, I'll go from there. When this reclaim happened, I was sleeping. When I woke up, Solana was trading here. When Solana was trading here, I couldn't justify taking a position. So I missed out on the trade entirely. We call that opportunity cost, right? By not betting on 200 dailies, by not taking the bet on a higher time frame outlook, so more speculative, but obviously more rewarding. So it needs to kind of shape up that way in order for, risk, reward, and probabilities to make sense. if you're not getting greater reward for taking a less probable kind of thing, then sports books wouldn't exist, right? So uh, by not taking that and by waiting for the more likely outcome to trigger, I was then forced to accept an opportunity cost. I did not make any money trading Solana on that next move upwards. Guess what? I'm okay with that. I still made money. I still went and traded something else at the time and then made profit on that. And then there was ample opportunity, and this, that, and the other coin were popping off and blah, 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 blah. And we can go trade that, and we can not sulk about the fact that we missed out on Solana. So hopefully this is a good kind of summary of how we should be thinking on markets, or about markets, on a broader scale in terms of how we would like to execute, right? However that makes sense to you. I'm not telling you that you have to wait for hourly 200s to be reclaimed on Solana. I'm not telling you that you're not allowed to buy until we get to 120. I'm not telling you shit. All I'm telling you is that you better have a way of navigating this market in both directions. You better be thinking more critically than your neighbor. You better be considering the market and all of its outcomes and its vastness, right? As if this is a game of chess. You better be doing that. Because if you're not, I don't have high hopes that you're going to do well. I have never, ever, ever heard a story where someone has been reliant on the market and has experienced a good outcome and has that dream fantasy that we all, think of. I generationally retired, and my grandkids will have it made for them whenever they grow up. No, I've never seen that before. It always ends in ruin every single time. It always ends in, I made a shit ton in the bull market, but I don't have anything to show for it, right? Or I made a shit ton in the bull market, and then in the past 3 months, I got absolutely fucking ruined, and I have none of that, but I still owe $2 million in taxes for that year, but I don't have $2 million. Yeah, I've heard that story a lot of fucking times because they were reliant on the market, because they needed something to happen, or because they needed to capture that next Solana trade. And so because they so desperately needed to capture it, and when you go scroll your crypto Twitter timeline, the same way that I scrolled mine and I saw, the way that CBS drew his support level made more sense. I probably wouldn't have closed at the Pico fucking bottom on Pepe. Damn, that fucking sucks, right? Whatever. I'm not CBS. He's not going to hold my hand. I'm Mercury, right? The same way, you go scroll your crypto Twitter timeline. Oh my God, the U.S. president just launched a coin on Solana. Here we are trading at 245. Don't you know it's so obvious that we're going to 1,000? And you're like, market buy, right? Because you just so desperately needed to capture that specific move on Solana. You needed, right? Urgency, desperation, reliant on the market. The worst thing, you start to feel very good about yourself. You feel vindicated in losing behavior because in the next few hours, you are immediately up 20%. And then as you start to feel so good about yourself, within the next few hours thereafter, you are then down -6%. And then this chop ruins you mentally, right? Then you end up lower, and then blah, 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 and then, right, that downward spiral really starts to kick in and gain momentum. And all of a sudden, as Solana starts to trade at 169, instead of having ways of navigating in and out, instead of having the ability to accept our decisions before we even reap what is the outcome of that decision that we're making, because we lack that ability, now Solana trades at 169. Now we are very adherent to, this is the worst bull market ever. Woe is me. The universe is out to get me. I can't believe Trump scammed me. I can't believe the Argentinian president scammed me. I can't believe this, that, the other. Where's my alt season? Worst bull market ever. I hate it here. Crypto failed as an industry. Well, I mean, yeah, that's been your experience. So of course that's going to be your take on the market. But I managed to retire my parents from this market. I'm not going to be making this argument that this is the worst bull market ever. Markets are whatever you make out of them. How do you make good outcomes from the market? You navigate, you execute, you be fluid, you have plans, you have backup plans, you have primary anticipations, but in the back of your mind, you know this is going to counter my strategy. I better be ready. If they move this chess piece, I know exactly what they're trying to do. I have to adapt. That's how you create favorable outcomes in the market. You have to do it yourself. It's not just going to be spoon fed to you, right? A really good post that I put out. I know that I'm ranting a lot. If you guys have questions, comments, please feel free. Maybe you're just enjoying my TED Talk. But a post that I put out yesterday is we need to break this fallacy of number go higher means that I will win. That's not how markets operate. I hate to break it to you. That has never been how markets operate. Why is it then, if the market has gone higher, because it has, why has everyone not won? How is it that Bitcoin is $100,000 and people are down horrendous and hate the market and feel as though crypto has failed and as if this is the worst bull market ever? How is that the case then? I thought number go higher is going to save you. It doesn't. Solana did 20x. It doesn't mean that you're going to make it out generationally wealthy, right? You had $1 million before the cycle, now you have 20 million. That's not how that works. WIF did, I can't even say the percentage out loud because it's a fucking number that's bigger than my comprehension. It did that kind of a rally. Where's our generational wealth? Where's the retirement? Mercury, where is it? Where's the private island? Pepe did the same thing. Bonk did the same thing, right? You have had a million opportunities. Trump did the same thing, that coin, before it sold off negative 90% from the highs. It still went on an impressive rally. It was still one of the most, high conviction, free money on the fucking floor kind of trades. How come we're not retired? Numbers have gone higher, but that does not correlate to because the number has gone higher, now you're profitable. Now you're allowed to win. Now we're making sure that you're going to win. It indirectly impacts you because how do people get drawn to the market? How did we get to the point where there was enough mind share out there in the Solana ecosystem so that WIF could rally from 0 to $5 billion market cap or whatever the fuck it did, right? How did we get to that point? Well, Solana started to put in some green candles, right? It broke out of a 10-month long range. It started to break out higher. It started to uptrend. We had, before WIF, there were a couple, micro memes that started to pop off. We had Geo Bowden, we had this, we had that, whatever, blah, 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 blah. So yeah, so green candles allow for more green candles. Opportunity creates more opportunity. So that's kind of the general, gist of it. That's always how markets have operated. We ramp up, that hot ball of money just gets bigger and bigger and bigger and bigger and bigger until eventually it explodes. But it's still going to be a hot ball of money. It's still going to keep rolling and rolling and rolling. And eventually it's going to get lit on fire and disintegrate. But how did we get to that point? Well, we had to show that strength. We had to create that green candle. We had to make that higher high. We had to do this. We had to do that, right? So to some degree, it indirectly impacts you. It helps you out. It creates a more favorable environment for you to succeed. And then people come in and say, well, bull markets are easy because of this dynamic. Because number go higher creates more opportunity. It eventually leads to, now I'm overwhelmed. There's too many things running. Everything's popping off. Everywhere I look, there's a new narrative. There's a new chart. I clearly remember times where myself and my buddies in crypto Twitter and in this Discord alike were like, man, maybe we should consider hiring interns because this market is just fucking crazy right now. Right? There's opportunity everywhere we look. There's airdrops, there's ordinals at the time, there's NFTs, there's Solana ecosystem, there's RWA assets, there's AI assets. Oh my God, man. I need like 3 interns right now to be able to navigate this market. And I trade full time for a living. That's how the market felt. So yeah, it creates that more favorable environment. It makes things a little bit more friendly, right? Things start to trend harder and longer. And we can maybe capitalize on opportunities. Now the same systems that we're applying, instead of getting 2R or 5R, maybe now we're getting 20 or 50, right? So that's the kind of appeal. We want to make it to those environments. We want to make sure that we're able to trade that environment, that we can capitalize on that opportunity. But just because that opportunity has been presented to you does not mean that you are automatically going to capitalize on it. There's a very specific dichotomy, and essentially the way that a follower of mine has broken it down to make it sense in a more like layman's term is the Wall Street cheat sheet chart is a meme. It's an absolute meme. You all know what I'm talking about. Where it's like, hey, this is, disbelief, right? And then this is hope. And then this is, mania and euphoria. And then this is complacency. And then this is, fear. And then this is blah, 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 blah. And then whatever, and capitulation and all that good stuff, right? So the Wall Street cheat sheet chart is a meme. This only applies to investors. It doesn't apply to you as a trader. You can be experiencing a euphoric fucking bull market, which we are, $100,000 Bitcoin, and that means complete fuck all for you. That doesn't mean shit. Unless you have Bitcoin stored away in a ledger somewhere, in which case, yeah, in addition to whatever gains you've made to manage to create for yourself in your trading account, your investment portfolio is doing pretty damn good too. Congratulations. But that has absolutely no correlation in terms of, are you going to trade this market well? It creates a, hey, you are more favorable to trade this market well, right? We've kind of created a more peaceful environment. The only way that you die is through your own stupidity. It's like Minecraft on peaceful mode, right? You're only going to die if you jump off of a fucking cliff to fall damage, or you jump into a pit of lava. Well, if you do either of those two things, that's your own fault. You're stupid. So the only way that you blow up is if you're stupid. We've created this environment for you. Here you go. Right? Your 2R is now turned into 20. Your 8% 3-week-long uptrend is now turned into an 80% 3-month-long uptrend. Here you go. Here's this environment. We've created a little bit more peaceful of an environment, right? It's not like playing Minecraft on hardcore, where if you die once, now you're screwed and you have to reset and start all over, right? Very much like PvP kind of mode, right? So this is the environment that we create, but that does not mean that you're automatically going to do well. It just means that you have a better chance of doing well. That's it. So here's where the slippery slope kicks in. You miss out on this move from here to there. Are you the same trader that you were just 2 weeks ago? Now that the market is up 40%. No. Emotions have kicked in. You're now starting to feel FOMO. You're now starting to feel as though you're not doing good enough, right? You're not compensating. You're not capitalizing on the opportunity. So maybe the emotions start to kick in. You start to market buy. You start to succumb to that FOMO. This is a negative 5% sell-off even though we can't see it. And then we, consider or continue playing into those emotions. We're now market closing. We're now doing this. We're now doing that. And somehow we were bullish. We were trying to feel FOMO and really capitalize on this opportunity to the upside. But now all of a sudden we're finding ourselves revenge shorting, right? This is where we blow up. And then that's the pullback that would have led to profit because we continuously dollar cost average into our revenge short. So now we're upset because the market stopped us out. And it's almost as though the market makers said, where's that guy's stop loss? Where's he going to be forced to market buy all of his short position back? Oh, right there. Okay, cool. Head there, but then after that, head lower, right? And that's a negative 20% pullback. And all of a sudden, we've created a miserable experience for you. But the Wall Street cheat sheet chart says that you're supposed to be fucking euphoric right now. How does that happen? You are detached entirely from markets. As a trader, let's just break it down this way. What's the appeal to trading as opposed to investing? Why would you trade the market when historically holders have won, right? They've done well, just on a long enough time frame. Go look at SPY. All you've had to do is fucking hold the past 15 years. It's gone up. If you want to drag that out, yeah, sure, there was 4 years or so, 2008 recession, crisis, blah, 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 whatever, downtrended, the market downtrended for 3 years. Oh, but if you drag it out on a bigger outlook, right? If you go back to 1990s or whatever, then holders still won. So whatever time frame, right? We can just say investors always win. So what's the appeal exactly to want to trade as opposed to investing? Oh, because even though investors win long term, they might not win from 2008 into 2011. They might not win from 2000.com bubble into 2002, 2003, 2004, right before we finally put in a market bottom. Yeah, they don't win in those spurts, right? Uh, they don't win in 2022. Mercury's ledger investment account was down negative 80% at one point because he just kept diamond handing, right? But he wasn't diamond handing; he was fucking coping. So yeah, we don't want to experience those. We want to still yield the uptrends, right? Still make it in the market from the good times, from the manic periods, from the more favorable environment, but we want to mitigate the drawdown. We don't want to be experiencing the drawdown as the market is experiencing capitulation or peak fear, as my Wall Street cheat sheet says that everyone is experiencing. We don't want to be doing that. So the entire fucking approach, or the entire premise as to why you started trading as opposed to investing, is so that when we get to here, you would be detached from the market. You would then apply that Warren Buffett bullshit mantra and say, oh, I'm going to buy as other people are fearful, right? I'm going to be greedy as other people are being fearful, right? How do you have the capital to be greedy and start buying when other people are fearful? When you're the person that's been invested in the market and you're the one that's fearful? Well, that doesn't make any sense. So you have to trade, right? You have to start to manage your positions. You have to make sure that you're mitigating that drawdown, that you're preserving that capital. Maybe you go throw it into bonds for a year and it accumulates 4%, and then you can pull it out and whatever, and then all of a sudden you get to buy BTC at a negative 80% discount to what it was a year ago. That's the premise. That was the appeal to trading. So how come we don't fixate on the fact that it applies to the upside too? How come nobody told you that? The same thing that you were drawn to markets for in terms of trading versus investing, and you said, by the way, 95% of traders lose, and you said, yeah, that's fine though, I can be that 5%. This is what you fixated on. This concept. I hate to break it to you. It applies to the upside too. Just because the market goes higher does not mean you're going to win. You have to create that opportunity for yourself, right? You do not need the market to go higher, but once the market goes higher, you need to make sure that you capitalize on the market going higher so that you can take that profit and then have something to buy, right? Have something to use as ammo to throw at the market as everyone else is fearful at the lows when the Wall Street cheat sheet is saying, hey, by the way, this is capitulation, right? That's the premise. Just because the market goes higher, it's not going to save you. It's not going to make you generationally wealthy. It only applies that way, one-to-one, perfect correlation, parallel, if you are an investor. That's it. Do you know how many people I had to experience throughout the course of my crypto trading career that said, or tried to belittle an OG's thoughts, right? And say, you're washed. Man, if I was trading all the way back in September, or all the way back in April of 2017 when Bitcoin was $1,000, I'd be fucking retired too. I would be able to start, tweeting some bullshit mantra and giving people, generic advice and be retired and on the coast of a private island right now. Yeah, I would be doing that too because I would have bought Bitcoin at $1,000 and would have rallied to 20,000 and I would have capitalized, right? And I would be retired. How many people I had to listen to say that, and then Bitcoin goes from 3,000 to 69. I'm no mathematician, but these numbers are pretty much the same, right? Oh, but you're not retired though. Oh, but you got liquidated on this move, right? Not even that move, this move, right? That one right there, you got liquidated. You're not euphoric. Actually, at the highs, you were down negative 40% on your account. But Bitcoin is up 15x. Wait a minute. It was up 15x here. You told me that you would be retired for this 15x. This 15x, you're down negative 40%. How does that work? It's still 15x, right? Well, what changed? Instead of 2017, we're talking about 2021. That's it. Instead of 1,000 to 20, we're talking about 3,000 to 60. The market is the same, right? It's different, but it's always different. The market is always different 100% of the time. The people that were trading this market didn't know that it was going to be, we go from 1,000 to 20,000. They didn't know that. They were trading based off the same principles as what they saw Bitcoin trade on in 2014 and 2013 and 2012. That's what they were trading off of. They had the same amount of information at the time as what we had in 2021. And the same thing in 2023, we have the same amount of information as what we had in 2021, which is the same amount of information as 2017, which is the same amount. Just because the market goes higher does not mean you're going to be generationally fucking wealthy and be able to extract, maximum value and afford a private island. Do you know how many people I had to watch say, yeah, right? So going further than a market cycle, right? Somewhere in 2022, 2023, those entrants and those participants, hey, I'm new to crypto, right? This is my first year trading. And he said they looked back in history and said, oh my God, Dogecoin went from 0.2 of a penny to 75 cents? What? All you fucking idiots, you OGs, you 2018, right? Like cycle joiners and whatever. You guys aren't generationally. Wait a minute. You don't have $10 million to your name? I would have $10 million to my name if I were here in 2020 to capture Dogecoin. You guys fucking suck, right? It's not my fault that I was in, junior high school taking my SATs at the time that Dogecoin rallied, whatever the fuck this number is, right? That's not my fault. If I were here to trade the market and I had a little bit of money, I would have $10 million right now. Oh, wait, this is not the right chart. Where's your $10 million, dude? Wait, hold on. How come you caught bonk, but how come you sold it right here? Oh, and then you bought it back, but you bought it back at this high, and then you sold it again, and somehow, some way, miraculously, you are down negative 30% because of trading bonk. But wait a minute. In 2020, though, right? Yeah, sure. If the year changed, and instead of if we were talking about Doge and not bonk, yeah, you would have $10 million. Yeah, I believe you. Oh, but yeah, right now you're down negative 30% on your account, claiming that this is the worst bull market ever. Yeah. I don't believe you for a fucking second. And here's the thing. You shouldn't believe yourself. If that's you, if that's genuinely you, I don't think that that's anyone in here. Thank God nobody in this fucking Discord is that delusional, right? And that overly confident on their abilities. I don't think that that's anyone in here. But if that is you, you need to break that. That is not the case. If you've convinced yourself that if you joined in 2017, caught Bitcoin at 1,000, but you watched it go from 3,000 to 60 and still don't have a 20x under your belt to show for it, or you watched it go from 15,000 to, we can say, 500,000, higher prices do not save you. That's not how that works. So I think a lot of the poor sentiment is not just because we have not gotten an alt season to the same degree as what previous alt seasons have been known for, which, by the way, everyone summarizes, myself included, summarizes alt season by saying everything went up. Well, that's not actually true. Alt season in 2021 was meme coins went up. And then we created new narratives, right? And then we created NFTs. And then alt layer ones went up. Oh, and prior to that, in 2020, DeFi coins went up. But if you were in DeFi coins, right, if you were sitting in fucking Litecoin throughout 2020, as DeFi coins were rallying like crazy, SNX, YFI, Uni, right? All these different coins, DOT even, or for whatever fucking reason, right? All those coins were rallying, but if you're sitting in Litecoin, you hated your life. You thought it was the worst fucking market ever. It didn't even make an all-time high in that bull market. So, yeah, markets are the same way that they've always been because they're always different 100% of the time. You've gotten the different this time. The dynamics have been the same. The philosophy that gets rewarded for approaching the market in that specific manner, with those mannerisms, with that specific mindset, is the same. But the tickers have changed. But the year has changed. That's it. It's still the same market. It still abides by the same principles. It will always do this for the rest of your life. For the rest of your existence, you get to take these philosophies and compound them year over year into whatever 2025 brings us, into whatever ticker it is that rallies 230x in that year, into 2026, into whatever Bitcoin movement from bottom to top that we get in 2026, into the next 4 year bull market cycle if we get another one, into the next fucking new all-time high that gets created on whatever your favorite coin is, right? Or whatever the newest hottest meme is, or whatever the newest hottest alt layer 1 is, or hot NFTs, or substrat kind of like play, ordinals, right? Were popped off. I know that they're fucking dead now. It's a wasteland there, but they popped off. I made a quick 10x on Node Monks, right? Or Node Monkeys, however you say it. So ample fucking opportunity year over year. You understand these winning concepts, you get to win for the rest of your life. Now we're not sulking that we missed out on Dogecoin in 2020, are we? Now we're not fixated and coping with our poor, positions or poor execution with, man, I wish I would have joined the market earlier. I wish I would have been here to buy the March COVID drop of, 2020. Man, I wish I would have bought Bitcoin in 2017 when it was $1,000. It's cope. I don't care if you were here. You would have succumbed to the same fate that you're succumbing to now, whether it be good or bad, right? This doesn't work just one direction. So good or bad. But the only difference is, had you joined in 2017, you would have had the same poor results as whatever you had in 2024 or 2023 or whatever, but it would have just been sooner, right? So that heading into, now we can say heading into 2025, we can change our philosophy. We can make sure that we're adherent to winning, strategies and winning concepts, and really hone in and focus on our execution and make sure that we're being fluid and we're adapting on markets. We're taking control away from the market and controlling the controllables, right? We understand risk management. We're applying that thing. We're starting to grasp these more intangible concepts like scaling assumptions or conviction, right? But we're going to do that in 2025 or in 2026, or maybe you've already joined a year ago and you did that in 2024, and hopefully that's provided value to you, right? Or 2023 or whatever. But the only thing that would have changed is we made those mistakes in 2017 so that we could fix it in 2018. So that for the next bull market cycle in 2019, we could then capitalize on that new mindset with the capital that we managed to preserve, right? And whatever new opportunities have been presented to us. And then maybe then, because we already did all that fixing in 2018 because of the mistakes that we made in 2017, maybe then we would catch Dogecoin as it rallies 230x in 2020. Your greatest opportunity awaits you. You have to be a perpetual optimist. You're not going to be able to capitalize on that opportunity with a woe is me, the universe is out to get me, this is the worst bull market ever, if only I were here in 2017 I'd be retired by now kind of mindset. I have never, ever seen or experienced myself someone getting out of that kind of state of mind with a "this was done to me." This is not a result of my actions. This is not something that I could have assessed or foreseen or whatever. It is purely, this is what happened to me. Woe me. Cry for me. Show me some pity, right? You don't get out of that hole. You just dig it deeper. You have to change. You have to change the mindset. I speak from both experience and also what I've witnessed. I'm sorry if you're winning so fucking hard right now, as you should be, that this is not even applicable to you. You're sitting here wondering why we went on this redundant ass rant, this TED talk, because it doesn't even apply to you. Because you're not miserable. Because your account is several multiples higher than whatever your previous new all-time high net worth was, even though it's still down negative 20% off of that previous new all-time high net worth. And you're kind of just lost and wondering why we're spending so much time discussing these concepts and this kind of state and this like hypothetical. But that means that you're doing the right thing. If everything that I just said does not apply, if it just seems detached, and you can also not fathom how someone would be in this state of mind, keep at it, because that means that you're doing the right thing. You have then therefore experienced number go up to small degree, right? We saw hourly 200s get reclaimed only for them to push a pity push, right? 2% higher just to get chopped up again. You saw higher highs to an expansive degree. We saw a 7-month-long range break out, and then lead to an immediate 50% 1 month long rally. Actually, 70%, right? We saw that. We saw number go down, right? Little tiny pullbacks along the way. We saw number go down negative 20% to then establish a range low at 91K. We then saw number go sideways, right? We've seen sideways to a small degree in the span of like a week in 2% range. We've also experienced a 2-month-long range. You also experienced prior to that the 7-month-long range. You have experienced, therefore, every fucking possible outcome the market could ever give you, up, down, or sideways, and to every degree possible, small or large, and yet you're still here, and yet you've still managed to create a new all-time high in your net worth, and yet you're still plotting on the next opportunity so that you can make an even higher high in your all-time high net worth, in your portfolio, in your account. You're wondering, why is this applicable? Why do we need to spend time on this? Whatever you are doing to be in that state, keep fucking doing it. You figured it out. Congratulations. Doesn't it feel fucking good when you get to that point? Isn't it vindicating when winning mindsets win, even when they lose that time, you come back a month later and you can thank yourself for having taken the bets that you've placed, the way that you've placed them, and executing the way that you saw fit. No regrets, no sulking, no hindsight bias, no woe is me, no I wish I would have joined sooner. Just taking whatever the market gives you and making the most out of it. Doesn't it feel fucking good? Congratulations if you're that person. If you're not, attempt. Make the effort. It's a conscious effort, and it's not easy. Whoever told you that bull markets are easy was fucking lying to you. If bull markets were easy, how come everyone's not retired? Right? If swing trading is easier than scalp trading, how come everyone's complaining that they didn't capture the Bitcoin move into $100,000? If swing trading is easier than scalp trading, how come Solana went from $25 range high breakout all the way 2 years ago, and after it broke out of the range, it was trading at $25, and then within the next year, it traded at 200? It's damn near a 10x. How come everyone's not euphoric that they 10x their account on Solana because they swing traded it? I thought swing trading was easy. Nothing in markets is easy. But here's the thing. This correlates to life as well. Nothing that's worth doing is easy. If it were easy, everybody'd be doing it. Bull markets are not easy. Number go higher does not mean that you're going to do well. It gives you a more favorable chance to do well. But you have to create that opportunity for yourself whenever the market presents that opportunity in the form of a more favorable environment. You only get there by preserving your capital. You only preserve your capital by executing, by being fluid, by cutting positions whenever they're warranted to be cut, right? You have to survive so that you can thrive. That's the TLDR. So I hope that This has been an enlightening 2 hour long rant, TED Talk, whatever the hell you want to call it. I have not even taken a single question. I've just, man, I don't know what got into me today. I guess, I don't know, maybe I'm feeling some type of way. Maybe it was the orange juice that I had before we entered the stream. Maybe I need to drink orange juice more often, or maybe I need to stop drinking orange juice, depending on, whether or not you like that rant. But we'll go ahead and take some questions here, comments, chart requests, anything that you guys would like from me. I know that we're already 2 hours in, but yeah, anything that you would like. So Tranquility says, Merc, what's up? Could you look at XRP breakout spot? I've spotted 2 taps set up in the parabolic trend on 5-minute, but I'm not sure where to hide my stop loss because it's close to weekly support. All right, let's break this down. So XRP, the setup that I was discussing on XRP, the thing that I'm really drawn to is if this manages to reclaim these 4-hour 200s, which I already said, this is not hindsight, I already said this is not a convincing reclaim to me. I'm still going to default to calling this a bearish retest. So that means that I am, Tranquility, the pansy that is waiting for a more convincing shift of this general region to then establish a swing long, to then target. Honestly, I could justify targeting price discovery. There's not really too much resistance overhead once we manage to expand away from this range high. So I think that maybe you're trying to take an alternative of this a setup, maybe a variation, maybe a more speculative low time frame. That's what it sounds like. You're jumping into the 5-minute to then get an entry before we even manage to reclaim the 4-hour 200s. There's nothing wrong with that. I cannot downplay that, idea or the way that you're thinking about it, but I just need to make sure that you're objectively considering the way that the context is shaped up, right? If you're trying to buy the reclaim of a 5-minute 200 MA's trend, let's say that this is what that trend looks like. Maybe something along those lines is probably not too accurate. Maybe something along these lines. If you're trying to reclaim that trend, wait, the breakout at so you're not talking about current XRP analysis. Okay. So anyways, now that I'm talking about this, let's scratch the low time frame 5-minute 200s shit. This is the reclaim that I'm looking for currently on XRP. Until we establish a more convincing reclaim, I'm not going to call it a reclaim. Obviously, at some point, I have to throw in the towel and stop saying, oh, by default, I'm going to say that this is a bearish retest. By default. Eventually, it's going to look like a reclaim to me, and I'm going to have to call it a reclaim. So whether we get a pullback or not, right? But that's really what I'm looking for in XRP, that structural shift, that reclaim, just because the way that it's set up, this is, more of like there's variance in between the two, moving averages. They're not tight and closely knit together as, they would be somewhere around here. So not totally ideal, but that is, the way that the game board is shaped up, and that's what I'm looking for. The question that you have is the XRP breakout all the way back here at 67 cents. And how would we have played this? And my honest answer to you is I would not, right? And that's me being transparent because I didn't play it. I didn't make any money from that breakout. So I would not. But if you were going to, the same way, the same application as to, if you guys are familiar with the Solana trade that we were referencing in previous live streams in the past week or so, Solana broke out in October 2023. And then at $25, that's where I established a position, because even though my ideal kind of swing long entry would be Solana pulling back into 4-hour 200s or whatever it was at the time, I think it was 4-hour 200s, to be perfectly confluent with the previous range highs, to then find a higher low on the daily market structure, to then give me a comfortable kind of entry so that I could hide stop below the previous structure. Yeah, what if that didn't happen though? And what if I miss out on a 5x Solana move in the next 6 months, right? All because I'm waiting for a negative 20% pullback that never comes. So if that's my, thesis, and that's a fear that I'm willing to allow myself to succumb to in order to skew how I'm operating on Solana, then how am I going to go about doing that? Right? Does that make sense? I'm taking the same thoughts. I still think XRP is going to break out. I think at minimum, a 2-year long breakout should lead to a nice 90%, 100% rally. But I don't want to miss out on a 100% rally because I'm waiting for negative 15% pullbacks into a high time frame trend. I still want to be able to play into that idea. I still think we're going to rally 100%, regardless of whether we pull back negative 15% first or not. So I want to play into that. I want to make sure that I'm exposed for that 100% move, but I'm not so, um, reliant on the market to give me a pullback in order to capture that 100% move. So how do we play the in between? How do we play the gray lines? We would have to zoom in. We would have to be able to justify taking that opportunity along more of a local trend, right? And therefore, it's probably going to feel a lot less comfortable. But we have to do this. Is the only way to adapt. We have to adapt to the volatility of whatever the chart is doing. So that means that we need to change the time frame of which we're looking at. So let's go look, right? Let's do this firsthand, you and I. Previously, I would have probably told you hourly 200s on Solana, really, really good local trend. What's the issue on this rally, though? Who fucking cares? Right? I mean, let's put it bluntly. Let's be very straightforward about this. Who fucking cares about hourly 200s? The market doesn't. XRP doesn't. That's who. So why do I care about hourly 200s? The answer, I wouldn't. I would adapt, right? I would continue adapting. I would prioritize what has this market prioritized more locally on this specific rally upwards, and hopefully to some degree the drawdown prior, and hopefully to some degree, the rally prior to that and the drawdown prior to that, and blah, 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 blah. What other trend per trail can I use? So my instinct, right, is to go from these very generic time frames, 4 hour, 1 hour, daily, right? Those are generic. Those are time frames that I'm very comfortable with. Those are time frames that, pretty much any trader is going to use at some point in their career. But I have to now curate it to a greater degree because this is not efficient, right? If I'm using hourly 200s, I would have been sidelined the same way that I was waiting for 4 hour 200s. So that's not helping me. The point is to add value, to add, okay, I was not able to assess this information on the 4 hour chart, but on this time frame, I do have that information now, right? Hourly 200s are not giving me more information. They're telling me something that I already knew. I'm getting sidelined. I'm getting front ran. So let's keep adapting. Let's go to local trend. All right, find a local trend. 30-minute 200s, is that good? No, not really. They're still kind of getting front ran. It's not all that great. We have to keep going, right? Maybe 15-minute 200s. Maybe that's a time frame that we're going to be comfortable with, and they are, right? So this is my local trend portrayal now for XRP. I'm so grateful that you asked this question when you asked it, because if you would have waited another month, TradingView would not show us the history, right? So I couldn't be able to get this point across to you to help you understand how can we, be malleable and change our strategy to adapt to volatility, and then find ourselves in a 15-minute time frame to then play a breakout of a 2-year-long range. Do you understand what we're doing, right? So here's the appeal here. When we're playing a 10-month-long range, that's our context. That's the border to the puzzle, right? That's the frame. That's the foundation. That's really why we want to play XRP. That's the appealing thing that drew us into the chart in the first place. But we're executing on that idea. Let's not even use this low. Let's give it even more, wiggle room. Let's say that this is the low that we managed to capture. We're going to hide stop below previous structure, right? I'm going to give you even more grace, though. I'm going to say that you are more loose with your stop loss and you hit it below this low. I've decreased the RR on purpose. Look how amazing of a trade this is. It's an immediate 10R. You managed to capture 10R because you're playing into 15-minute time frames, right? To scale into, this is what I think happens after breaking out of a 2-year-long range. What are pros and cons, though? Let's not fixate. Let's not say, oh my God, I wish I would have traded the 15-minute 200s on XRP. Oh, so next time I'm going to throw everything out the window and just trade the 15-minute 200s. What's the pros and cons? This setup works. You capture 10R. You also manage to make sure that you're exposed to XRP for a 2-year-long range breakout. That's pretty huge, right? You have captured that rally. That means that you're going to have the willingness, the courage to go and trade the next rally. on XRP, right? You can trade the breakout of this consolidation structure that develops. Right? You can trade that high stop loss structure, and even though it's a little bit of a fluke, your position would have been rewarded all the same. So you can compound these gains now. Now you've gotten a taste for what it's like to trade XRP to the upside, in addition to the 9R that you've already captured at minimum. So what's the con exactly, Mercury? This is amazing. We managed to generate 10R, right? We zoomed into the 15-minute to play into a 2-year range breakout. If this breaks down, well, you take a loss. It's an unnecessary loss, because maybe you just could have waited for your 4-hour 200s to be pulled back into, right? Maybe they would have looked like this, right? Maybe we consolidate for a little bit, and then we break down, we test 4-hour 200s, that's your entry, and then in hindsight, you never needed to apply the 15-minute 200 MAs setup. Here's the thing, though. When you frame it the way that I just framed it, you get to capture 15-minute 200s, play into a 2-year range breakout. As a result, you're targeting a 10R move. 10R, right? Is it appealing to play the local time frame just in case? Absolutely. The way that the context has shaped up, I'm trying to be as transparent as possible. Obviously, I can only do that to a certain degree because this is not how I actually traded XRP at the time. So you have to give me some grace here. And just believe me, I'm trying to be transparent with you. This is one of those scenarios where even though I am the person that I just told you, I'm waiting for the cohesive, let me see that structure. Okay, yeah, I believe you, XRP. Yeah, okay, I'll call that a breakout. Even though that's how I am in my innate nature, I need you to believe me that if I were on top of this setup, I'm taking it. The context, the way that it is shaped up, has made it to where one of these options is now drastically more appealing than the other. So yeah, I'm going to pounce on that local trend setup, 15-minute 200s in tandem with the range high breakout. Here's the thing. If I apply this is why I'm saying do not focus on the good only. You're going to be very tunnel visioned. If I applied the exact same rationale here, what's the result? It's not 10R, it's -1, right? And then the reality, let's talk about reality. We don't live in fairy tale land where every single test of trend always works. The reality, then you get your pullback into 4-hour 200s, only for them to break down. That's reality too. You have to survive and make whatever best decision that you have available to yourself and take comfort in the decision that you've made, knowing that you are doing the right thing long term, the way that it has shaped up that time for you. Not, oh, if this is the time that XRP rallies 100%, I'm going to capitalize 10R, but I'm going to make it. I'm going to be generationally wealthy, right? I'm going to 10x that position because I really think this is the time so that I can make 100R, right? So I can just, yeah. Oh, but if this is the time that it breaks down, I'm fucked. Sorry, you have to do both. You have to know that if XRP breaks out as a result of your way of adapting to volatility, zooming into the low time frame, taking a more appealing setup from, RR perspective and making sure that you can execute and be exposed for that next leg higher, you know that you might get stopped out -1R. You might even get a pullback into your high time frame trend, which you applied that strategy, right, of adapting to low time frame volatility because you were so fearful of maybe not getting that pullback into your high time frame trend. Where here's your pullback into high time frame trend, except yeah, that's going to break too. So now it's -2R maybe, right? You have to know that what you're doing makes sense to you. The way that your discretion, the way that your portfolio exposure at the time is shaped up, the RR on that trade, the probabilities that you have attributed in tandem with that trade in terms of what you perceive them to be, right? And that goes with intangibles too. What is the market environment? What is the sentiment? What is this? What is that? What is the regulatory background? That was a big foundational piece to a lot of people's reasoning as to why they caught XRP breaking out. It was because after Trump became president, right? He was inaugurated, or I'm sorry, he won the uh, race on, I believe, November 11th. So on November 11th, XRP breaks out, and then after that, if Trump is going to put in all these favorable U.S. regulations, that's going to help U.S. established coins. Well, what are the U.S. established coins? And then you whittle down that list, and one of them is XRP, right? So that is a very discretionary, outside, external kind of factor that absolutely factors into your decision-making process. So I'm not saying it's the base foundation. I'm not saying you should take this trade this time or you shouldn't because of Trump favorability regulations on crypto or whatever. But that is an external thing that absolutely does play into your discretion. The primary thing that we're fixated on is, okay, do I want to play this range high breakout? Do I want to buy the local trend? If so, what is the local trend? Would I rather wait for a pullback into 4-hour 200s? What's the RR on the pullback 4-hour 200s? What's the RR on the local trend setup? How clean is this range high to me? Some of you are looking at this range high and like, why the fuck does he have it drawn that way? That's not how I drew my range high on XRP. Well, guess what? This is how I drew mine, right? From years ago, way before this breakout, way before these tests even. So yeah, all that stuff, primary, but then external, secondary, we tie it in. Maybe I should take the local trend setup on XRP this time. Yeah, it might give me 10R. If it doesn't work, -1, no big deal. And then maybe 4-hour 200s get pulled back into, and then we can see what happens there. But if it does work, 10R, maybe even more. Now that's appealing setup, right? Now we've kind of convinced ourselves that we have this option, this option, this option, but this is the one that we're most inclined to want to take. Potentially. Doesn't mean you have to agree with me. You could decide to wait for the pullback, miss out, whatever, no big deal. Doesn't mean you're a shit trader. Doesn't mean you suck at trading, you're going to have fun staying poor for the rest of your life. That's not what that means. It means that pertaining to what the outcome was, you made the quote-unquote wrong decision. But if you're profitable at the end of the year, are you ever really wrong? Does it matter? Does it matter if you caught this opportunity or that opportunity? Does it matter if you got stopped out on this trade or that trade? If at the end of the year, your portfolio is still substantially up from what it was in the beginning of the year, is it not just you playing into your system on your own timeline and taking bets when you see fit and warranting positions and sizing appropriately and managing risk and doing things, right? So it doesn't matter. But how do we come to the conclusion that this is an appealing setup or it isn't? I believe that that's the premise here. That's the main question. How would we have tackled XRP in hindsight? So hopefully that helps. And then you're taking it a step further, Tranquility. You're saying if we want to wait for a higher probability and look for a setup in 5-minute 200s around 80 cents. Let's see, where's 80 cents? So somewhere around here. Let's see. I don't think TradingView is going to let me go back that far, if I'm being honest with you. Yeah, it doesn't. Unfortunately, it does not let me go back that far. But if you're talking about like local trend reclaim, so let's say that this is pretty extreme. This is, you lost me here, but this is an application of the snowball snowman idea. So let's say that this is 15-minute 200 MA's trend, right? And this is what that trend looks like on the 15-minute chart. And this is that trigger where we're like, okay, that's the pullback into previous range highs, whatever. You're talking about, I think, correct me if I'm wrong, this is 5-minute 200s. So in theory, we could take a higher probability setup by waiting for the reclaim of 5-minute 200s. And then you could establish or play into the same concept, right? By the reclaim of this parabolic trend, and then hide stop below local trend, and then target continuation breakout of a 2-year range. That's pretty extreme. I don't know that I would take it to that deep of an application, but that's just me. But you're not wrong, though, right? The concept is there. It's the same thing as like if you change this, if this is a 4-hour 200s, right? And then this is, uh, hourly trend, right? It's the same concept. You reclaim this one, you target, higher thereafter. Technically, you would consider the probability this time is greater than what it was here, right? In tandem for that, though, to offset that, usually what happens is your reward is lesser. Usually, that's not always the case, but generally that's how we think about it. So it is technically you are correct. You could approach in that manner, but you're talking about the difference between buying 15-minute 200s versus buying the 5-minute 200 MAs reclaim 1% higher, right? So a little bit extreme. You lost to me personally, but technically you could think about it that way. Absolutely. Um, Thank you for the TED Talk. You're welcome. I'm glad you enjoyed it. Just curious if you're still in the BNB position. I am. At least when I checked this morning, I still was. I don't know what's happened since then, but I still am in the BNB position. The main reason here is because I'm giving it wiggle room. I'm allowing it the discretion to do whatever it wants to do and giving it a little bit of grace to just hang around these 12-hour 200s, right? Here's the thing. I know that people love to fixate because I do it too. I catch myself doing this at times as well on the moving averages, right? In a black and white and gray chart, the only thing that really sticks out is the green and blue lines, right? They're highlighted. They're kind of like at your face, right? You're forced, your eyes automatically magnetize to wherever the moving averages are. Please, please, please keep in mind, I do not use them as law. They do not tell me anything that I don't already understand. So the best example that I can give here as to why am I still holding on to that BNB position, but I've already cut Solana, is look at Lido, right? And go look at what is the most recent analysis that we gave on Lido. It wasn't, oh guys, we're trading, you know, below the 12-hour 200s. Clearly Lido is fucked, right? No, that's not the analysis that we made. We said even though when I put out that analysis on Saturday or Sunday, whenever it was, when I put that analysis out, we were already negative 18. I thought it was negative 15. It's actually negative 18% below the very high time frame trend. So why was it still on the watch list, Mercury? So why is it still potentially an outperformer and something that we should maybe keep our eyes on? You know, maybe it's going to still rally, you know, who knows? Same concept as the past few months, but Mercury, this time, the past few months, right? We've been above 12-hour 200s in addition to trading inside of this 2-year range. But this time, we're below the 12-hour 200s. So how does it still make it on the watch list exactly? Well, it's the general concept, right? It's the idea, it's the premise, it's the zoom out. Think about it as a cloud. It's not telling you new information, it's telling you information that you already understood, right? Lido is going down. Oh, by the way, now Lido is going up, right? That doesn't really change even with that negative 18% in this context. In this context, if the range low were drawn like this, you would have gotten a different story from me. I'm not kidding. You would have gotten a totally different analysis, right? If that's how I drew my range low. So the context changes, right? It changes our discretion, and our discretion changes our analysis, and our analysis dictates how we want to execute. So in this specific context, we're still negative 18% below Lido 12-hour 200 MA's trend, which is the same trend that Mercury has been reminding us that he's been able to use as a money printer for the past 2 months, right? He caught 10R just on Lido alone, just trading it twice. But this time we're below it. But we're still inside the 2-year range, right? That's how we combat that. That's how the tie-in, the greater context. So all of a sudden, now when XRP is up 40% in the span of 3 days, we can say, haha, I told you so. So I have that luxury. But it was just the discretion, right? I'm just giving things a good enough amount of wiggle room based on however I'm seeing the chart, right? However I see fit. I'm not trying to be biased. I'm not trying to say, oh, well, I did good on Lido, so you're not allowed to call this a breakdown, Mercury. You have to be bullish biased on Lido for the rest of forever. No, that's not my attempt here. That's not what I'm succumbing to. I promise you that's not the case, right? As soon as this starts to break down, we're going to leave it off the watch list as it was off of the watch list for a good portion of the past 2 years, right? So, and for good reason, clearly. So, yeah, it's just I'm trying my best to play into things that I know this is the time frame, this is the outlook that I'm playing into them. So I'm giving it that wiggle room to a proportional degree as to whatever I'm playing, and making sure that I'm keeping in mind what is that greater context, what is the border to the puzzle, right? The greater foundation to all of the arguments that I'm adding on after the fact to create more detail, right? To fill in the puzzle. So for Lido, that's how it was, and rightfully so. For the same reasons, I'm allowing myself to hold on to that B&B position for now, right? Eventually, there is going to come a time. By the way, this is my stop loss on B&B. We could do this, right? And I'm going to at some point. Fuck, that looks like a breakdown, right? We didn't get to my invalidation yet, but it's no longer, oh, I'll just give it some grace. I'll just give it some wiggle room. Oh, I'll just give it this. And you might be asking, well, Mercury, we're still in the range high. Isn't that kind of similar to the Lido context? We want to give it more wiggle room. The only reason that I could combat that argument is this range high is not as clear to me as Lido's range low. Do you see what I mean by that? It's not clean. It's what the fuck is this range high? Some of you have it drawn like this. Some of you have it drawn like this. Right? Some of you see this as the range high, and you're sitting here wondering why I'm so damn adamant that B&B looks good. So it's not clear to me. It's not as, oh, okay, this is the range low. This is the key level in tandem with the higher time frame trend. So when one piece of my argument or my strategy or my system starts to, break down, I'm a little less adamant about wanting to hold on to that argument, right? Because it's not as clear to me. It's a little looser. I'm willing to see the other side of the coin a lot more freely. This is all discretionary, guys. If you thought my system was as easy as if we're above the green and blue lines, you're going to print money, just fucking turn your brain off and target the top right corner. If we're above or below the green and blue lines, you're going to, the market's going down, so just sell and never look back. If you thought it was that easy, you have another thing coming, right? Investopedia is not going to create a George Soros kind of trader or investor. It's just not going to happen. Anybody can go read Investopedia for 15 minutes and understand what is the difference between an MA and an EMA. But not everybody knows how to trade moving averages, right? And create consistent profitability from something of which, by the way, is not consistently profitable. It's not. Moving averages do not work greater than 50% of the time. But here's the thing. No indicator does. Not a single one. So the true value is in knowing when not to use them, right? Knowing not to put so much emphasis on, oh my God, look at that. We're above 12-hour 200s now, right? We don't want to say those things. We want to refrain from it. So this is just my discretion. You can agree, you can disagree. I'm not telling you that you're not allowed to cut your B&B position until 597 or whatever the fuck. That's not the point. You're allowed to do whatever the hell you want to do. But this is just how I am looking at B&B. For better or for worse, right? I'm going to have to come back and say, guys, I had to cut, or I got stopped out, or whatever. Or I can come back and say, like Lido, which, by the way, I did not trade Lido. I want to be very transparent here. I win too much organically to have to fabricate wins. So I'm telling you about the discretionary context and how that led to 40% higher and blah, 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 blah. I did not make money on that 40% move, right? Ever since trading Lido those 2 times and capitalizing 10R, I've not traded it again. So I just need to be transparent, right? If we're able to come back, I can say, cool, right? That's that discretion kicking in. That's that, hey, I want to give this a little bit more grace. Let me make sure that I'm reminding myself of what time frame outlook that I'm trading. So for better or for worse, right? Blockzilla says, sorry to bring up XRP talk again, but it's cool to see how the waves of the system come together sometimes to have a high percentage win rate. The 4-hour and 30-minute and ultra high time frame, ultra low time frame, I think, 3-minute time frame coming together in one point. Yeah, so that is a beautiful example as to what is Confluence, right? So it's like usually we think about perceived probabilities in the sense of Here's a trend, and we start a local trend reclaim, and then here's a high time frame trend, and that's a high time frame trend reclaim. But here is where both time frames line up beautifully amongst each other. So this is confluence, right? This is snowball, and then that is greater snowball, but this is confluence, right? We have the same argument across multiple different time frames or multiple different perspectives, all aligning at the exact same region. Confluence adds to confidence, right? When you can discuss why are you bullish on Bitcoin? If I told you, hey, it's the color orange, right? Does that sound like a convincing argument? No. But if I told you, hey, it's the color orange, it uptrends historically since existence. There's only ever 21 million Bitcoin that will be created. Institutions are adopting Bitcoin. Q4 seasonality is really bullish, and here we are trading in November. And blah, blah, blah. Now it's more convincing, right? Now it's not just the color orange. It's not, okay, yeah, I mean, sure, I guess maybe the color orange is underappreciated, but now it's, so this is what it's done since history. Oh, it has a scarcity narrative. Oh, it's a bullish environment. It's favorable at the moment because of seasonality. Oh, because this. Oh, because that. Now it's more convincing. So, what does that mean then when I'm holding on to my Bitcoin trade? Or if I'm looking to establish a position on Bitcoin, am I not more confident and able to adhere to the ideas that I'm, trying to play into? And when I'm playing into all these, different perspectives, as opposed to, I like the color orange, right? I'm a lot more confident. I'm a lot less susceptible to getting fluked out or cutting a position, 10% profit, even though there's nothing wrong with the trade. Hey, we're down -2%, but I have to cut losers quickly. Even though I have to make sure that I'm being patient with my positions, I need to cut losers quickly, and this looks like it's starting to break down, -2% lower than where I just entered. The color orange is not cool anymore, market close, right? No, I'm less likely to do that. I'm more likely to adhere until all of a sudden, here we are. It's no longer Q4. Maybe the downtrend is starting to downtrend. The color orange really is not that cool, right? And then I can start to wean off of those arguments, right? So, confluence, it feels good. It feels really good. That's why we often look for it, right? I love, love, love when I can justify the same position across several different perspectives on Ethereum, because I don't think we talked about Ethereum. I was too busy ranting all day. On Ethereum, we're looking for that reclaim, right? And so what is this on a high time frame? On a very high time frame outlook. Does everybody remember what we said for Ethereum in November? Around 2,900. So, guys, by the way, we're reclaiming. Look at this trend. Fucking cool, right? Yeah, we're reclaiming that now. Maybe Ethereum goes higher. And so what did we use to tie in that analysis with? Oh, by the way, in addition to gaining 200 daily moving averages, we're also deviating back inside of this range, right? So that's a deviation back inside of this range. This is all one big deviation to this range. What does that mean? Range lows, mid-range, range highs. Now we have two arguments. We're reclaiming 200 dailies, and we're back inside of this massive range. Let's keep going. By breaking into this range, we're inherently breaking out of this range. This is a 4-month-long range breakout. Unlikely that we're going to break out of a 4-month-long fair value zone just to trade 10% higher and then, trade -30% lower the next day. That's not how we think about probabilities or the market dynamics or proportional kinds of movements or blah, 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 blah. That's not how we think about that. Now there's 3 arguments, right? Now there's a more solidified reason to understand and want to play into why would Ethereum go to 4,000? Here's the thing that we have this time around that we didn't have the last time. In addition to all those things that we just said that are still true, if Ethereum breaks out at 2,900-ish region, we are reclaiming 200 dailies. We are breaking out of this range once again to break back inside of this one. We are, I forgot whatever. No, I just said all the reasonings, right? But at the same time, we are also reclaiming a high time frame trend per trail. Whereas previously, we were already above it, right? We were already above that trend. We just gained that momentum. It was actually irrelevant. We had to zoom in. We had to use hourly 200s, right, and start trading those, and then get a jump for what is Ethereum doing and how could we actually trade Ethereum, because the 4-hour 200s were totally fucking irrelevant, right? So this time we have even more arguments. We have an additional argument. And then we can even tie in local analysis as well, right? If we're reclaiming this region, not only are we putting in a higher high on the daily, not only are we deviating back inside of this massive range, not only are we breaking out of this massive range, not only are we reclaiming this high time frame trend, but also we're breaking out of this local range too. Right? We went from choppy sideways to uptrending on that time frame. That all happens here. That's not snowball, bigger snowball, body of a snowman, almost a full-fledged snowman, carrot for a nose, right? No, that is, there's not really too much here. All of a sudden, 10% higher. Oh my God, wait a minute. This might break out. This might go to 4,000. Maybe it doesn't stop at 4,000. Maybe it goes to price discovery. Now we jump to that conclusion, right? It's a more like reasonably defined from several different standpoints and several different perspectives because we have confluence. It's all happening at the exact same general region in the market. So confluence feels good, right? It's vindicating. It helps you justify. And also, by the way, unjustify your bullish arguments as to why you thought Ethereum would go to 4,000 the same way that we thought it would go to 4,000 here would be bearish arguments once again. We reclaimed the 4-hour 200s just to lose them again. We put in a higher high in the daily just to shift the daily structure bearishly again. We deviated back inside of this range just to break down. Do you remember when we said the same thing here? We reclaimed the 4-hour 200s. We deviated back inside of this range just to break down below the range again and to lose the 4-hour 200s. That's not good. We don't like that. No, that's not bullish. We're not going to sit here and say, no, Mercury, you were just early. You're just early to your Ethereum's going to outperform analysis. Imagine how I would be here today if I would have told myself, no, I'm just early, guys. I'm not wrong. Alt season's coming, guys. No, I'm not wrong. I'm just early. Negative 40%. Altcoins, negative 90%, right? So good thing. We know how to justify and unjustify. If it's confluence in one direction, it's also going to be confluence in the other direction too. That's why confluence is oftentimes so directly attributed to like conviction and how we feel about the market. Because if we're able to say, okay, definitively, this should, in theory, be all good things, then the same way we should be able to unjustify. So when we go to execute in the form of, we were wrong, I know I was wrong, and yeah, I am probably going to continue being wrong, I need to adapt, it's that much more clear, right? We were able to do this, and this, and yet still nothing happened as a result of it. So, now we're below all those things again. Now, isn't that convincing to the opposite direction? It is. It should be. It helps. It's kind of a crutch. It's something vanity or arbitrary that's allowing our brains to comprehend what's different and what isn't, right? And then we can play probabilities and manage risk in tandem with that and extract value from the market. From a comfortable standpoint, it makes a lot of sense. It's very rational. I understand the concepts. I understand the arguments. And I also understand what those arguments are no longer applicable. So, confluence. Very, very attributable to like conviction and helps with understanding and warranting position sizing and all that kind of stuff and perception of probability, right? We drastically increase. All of a sudden we go from snowball to body of a snowman, right? That's a big jump. So that kind of way of thinking. Another question on your mindset. Since Bitcoin is under low time frame and mid time frame trends, how much does that weigh on you for a choice to long something like a strong reclaim on XRP if XRP reclaims? You gave that little addition. So zero, absolutely zero. I need you to understand we're here to trade altcoins, right? We're here for the 10x, 50x, 100x movements on altcoins. That's really what's going to change our lives. Bitcoin, even if Bitcoin goes from 100,000 to a million, it's only a 10x, right? The irony. This is the reason why people have told me I'm not coping trading Bitcoin or because I didn't trade Bitcoin. It wasn't going to change my life anyways, even if I traded it. So I'm going to go trade something else. So you're looking for those exponential gains. You're looking for, whether you realize it or not, Bitcoin outperformance. Answer this question for me. If every time an altcoin breaks out and starts to outperform, wouldn't that mean that Bitcoin doesn't look as good? Right. Every time, 100% of the time, if an altcoin is outperforming, it is better than Bitcoin. So meaning Bitcoin's uptrending, but to a lesser degree, right? Or my coin is going up, but Bitcoin is going sideways. Or the more drastic relative strength, Bitcoin is straight up going down. It is depreciating. But here's my coin making higher highs. So hear me out. If every time that an altcoin started to show strength to Bitcoin, you then said, nah, I'm not going to trade it because Bitcoin looks weak, you are a fucking hypocrite. You don't even realize that you just contradicted the entire premise as to why you're trading crypto. Go trade Forex. This is not for you. Go trade gold. This is not for you. I'm serious. You don't realize how much of a contradictory pain in the ass that you're being, right? Like that. So if your altcoin is showing relative strength to Bitcoin, it's probably for good reason. Here's the example that I'll give you. Somewhere around here, hourly 200 MAs on Bitcoin look like this. Something along these lines. Somewhere around here, I throw in the towel on my Bitcoin analysis, and I'm like, guys, just so you know, yeah, I know that I was talking about we probably go to price discovery and blah blah blah, and just respect the trend. But here's the thing, guys: the local trend is broken, right? Local trend on Bitcoin is broken. From here, we can tie in the other pieces of the puzzle. It's not like we lost the hourly 200, so I'm like, oh my god, bear market, right? That's not how that works. It's not like we have a ton of confluence in this region, so I can just jump from snowman, or I'm sorry, from snowball to basically a snowman. That's not how this is working. This is a snowball of weakness. I do think that Bitcoin is going to pull back negative 12-ish% into 4-hour 200 moving averages. That's our high time frame trend portrayal that we've been using. And then we'll see what happens from there, right? That's the ideal high time frame swing long position. We're going to look for that pullback on a greater degree, and then we'll see what happens, right? If we reclaim hourly 200s, we get to target trend continuation amongst all time frames. Isn't that the same thing that we said back here? Yeah, let's do that, right? So let's apply that concept. But the immediate analysis at face value, what do I think happens in the next week? I think we go negative 12% lower. What day is this? March 14th, 2024. This is a trade that I can give you an example for that I took. So everything that I'm about to say, you can take at face value. There's no hypothetical. There's no I'm going to give Mercury the grace and assume that he actually would have done what he is saying that he would have done. This is actually how I traded this. Where's March 13th on Solana? Bitcoin is losing a local trend. Solana's making a higher high. Does it make sense for me to close my Solana position, right? This is where I managed to buy Solana, somewhere in this region, or maybe it was somewhere in this region. I don't remember what the initial entry was, but This is the trade that I'm managing. I'm in a Solana position. I'm trading it to higher prices. I'm swinging it to the top right corner, maybe even price discovery. I don't know. But I'm targeting higher. I know that for sure. Solana's making a higher high as we speak. At the same time, Bitcoin is topped out. I don't know it at the time. Bitcoin is put in a top. As Bitcoin breaks down below local trend, Solana continues making higher highs. When I go look at hourly 200s on Solana, or maybe it was 30-minute, I can't remember. Where is it? Oh, I think I was using hourly. When I go look at hourly 200s on Solana, we're not even close to even retesting them. Am I just going to capitulate my Solana position because Bitcoin's breaking down? Doesn't that contradict the entire premise as to why I'm trading Solana in the first place? It absolutely does. It contradicts it. I would be a contradictory piece of shit if I close my Solana position that I entered because Solana is going to outperform Bitcoin, which means it's going to look better, trade better than Bitcoin. And then as soon as it starts to trade better than Bitcoin, I'm like, oh my God, Bitcoin's not looking good, market close. What the fuck? How does that make any sense? It doesn't. It doesn't make sense. If I would have closed my Solana position, I would have missed out on an additional 30% move as Bitcoin trades negative 12% lower. So that means that ledger account that I only just recently took profit on in the first time in 7 years, that went down negative 12%. And I missed out on 30% on a trade that I had every reason to capture because I was already sitting comfortably in that trade. It was only ever going to be a matter of, am I going to get only this much profit? Or am I going to get more than what I'm currently in profit in? That's it. That was my biggest issue. Is this going to be the maximum profit that I lock in? Or am I going to get more? Yeah. So now I've underperformed the market to 40% degree. Do you understand what I'm saying? Missed out on a 30% move that I absolutely should have captured. And I'm capturing at the same time negative 12% in my ledger account. Doesn't that feel fucking stupid? It does. Because it is. It's stupid. Don't be contradictory. Know why you're here. So if you know why you're here, we can not contradict ourselves. We can know that if XRP really gets ramping, even if Bitcoin at the same time is breaking down below the 2-month long range, if XRP is making higher highs into price discovery, go trade XRP. Don't go revenge short it because, oh, Bitcoin's breaking down. How could XRP go higher? Oh, you might get blown out on your short before XRP ever decides to move lower and follow Bitcoin, right? That's reality of trading. And this is consistent with altcoins. When altcoins really start to outperform, and it is night and day, this thing is topped out below local trends, downtrending. I'm talking about Bitcoin. But this thing, higher highs, maybe even price discovery. There's a big discrepancy there. It's probably for good reason. Solana went 30% higher before it started to chop sideways and then sell off a month later. There's a big difference there, right? And so then you have to consider, in addition to market closing before that 30% move because of whatever Bitcoin did, maybe you also took a range high breakout trade on Solana and targeted price discovery, and then you lost 1R as a result, right? Before you could recognize, that's a deviation, this is a loss of structure, break in trend, loss of key level. Yeah, I'm wrong. All right, let me accept my loss, negative 1R. If you do not have that additional 30% move under your belt, that negative 1R not only is going to hurt a lot more mentally, but it's also going to eat into your portfolio more, right? You have less house money to be playing with. You have less profit to give back to the market to make sure that you're only ever going to be drawn down a certain amount before good times come again, and before your system starts to reward you to the same degree of which it already did. This is what I mean by you need to make the most out of the favorable environments in the market. If you go out to that Bitcoin chart, I know that we're trading at 100K. I know that 2 years ago we were trading at 15. But how many substantial rallies have we had on Bitcoin? Let's count them out. First, let me get rid of this object tree. How many substantial rallies have we had on Bitcoin? Obviously, there's the one, right? This is one. This is two. That's three. I'm going to count this one because I actually did make money on that rally. So that's four. That's five. This was my greatest trade ever at the time. Total fluke, by the way. I just bought USDC DPEG because I didn't see a better option. And this is six. 6 times. 2 years. Yeah, when you're given this environment, you better fucking make the most out of it. It only happened 6 times in the past 2 years. Make the most out of it. That does not mean leverage balls to the wall, refinance the house, make sure that you're taking, levels of risk that you are not comfortable with and have no business taking. That means make sure that you're not taking too much profit too early. Make sure that you're not market closing positions for no good reason. Make sure that you're not being a contradictory POS by closing your altcoin positions because of something that Bitcoin did. As long as that altcoin position is still justifiable, then you can still justify being in that trade. Maybe it continues to reward you. It's not just the difference between Solana going up 30% and Bitcoin trading down -12. It is the difference of RNDR doing 100 or 250% movement and being one of my best trades ever as Bitcoin only goes up 70. It is the difference of Doge doing 150% move upon a 2-year-long range breakout as Bitcoin only does 50%. Or actually starts to stall sideways somewhere in this region. Or I think somewhere over here. So yeah, if I'm prioritizing, I'm literally trading this altcoin because it's going to outperform Bitcoin. But that means that it has to look better than Bitcoin. But because it looks better than Bitcoin, I'm scared because what if Bitcoin, right? What if Bitcoin breaks down? What if it drags my Dogecoin with it? What if it drags Solana with it? You're being a hypocrite. You're going to be very wishy-washy. You're going to find yourself in amazing trades, but cutting too early. You're going to find yourself having more cool stories than you have profit. You know what I mean by that? More cool stories. Yeah, I had a 10-cent Dogecoin position before it rallied to 40 cents the next month, but I closed it at 12 cents because, I don't know, some random news event came in, and you have a bunch of cool stories. You can't pay your rent with cool stories, sorry. So, you don't want to have those cool stories. You have to adhere to some winning philosophy. But this is that philosophy. Let me set this straight. This is dogma. This is how you trade this. This is how you think about it. And that's just how it is. For better or for worse. If XRP breaks out of the range and you're like, oh my God, Bitcoin's breaking down, but XRP is breaking out. It threatens price discovery. It threatens this. It threatens that. And then XRP trades lower and you get stopped out. I need you to know, and you need to be able to know, that you still did the right thing. You still traded the more rewarding, I'm not going to say more probable, even though in theory it is more probable, the more rewarding behavior on a long-term standpoint, right? Doesn't mean it works 100% of the time. If it did, I wouldn't be here hosting this stream right now. I'd be off on my private island. But yeah, it absolutely is rewarding long-term. All right. I think that's it. And it doesn't seem like you guys have any more questions for me. I hope that clarified it. It seems like it did, Blackzilla. So thank you for the questions, guys. I really enjoyed the conversation, even though it was really just me ranting to you for the entire time. But thank you guys, as always, for tuning in live, especially for keeping the discussion going and flowing and making me feel loved. So much appreciate each and every single one of you. Take it easy, and I will talk to you again on Friday. Peace, everyone.